morning. It is Friday, June 24th. We are ready to hear the appeal of Rudolph Paul Carmona and Carmona's Collision Repair, Inc., case ID 180-63322 and 180-63323, respectively. It is 10:16 a.m.
Okay, thank you. So we're opening the record in the appeal of Rudolph Paul Carmona and Carmona's Collision Repair, Inc. before the Office of Tax Appeals. This hearing is being convened in Cerritos, California. OTA case numbers 1806-3322 and 1806-3323. Today's date is Friday, January 24th, 2020. And this hearing is being heard by a panel of 3 administrative law judges. My name is Andrew Pui, and I'll be the lead judge. To my left is Suzanne Brown, and to my right is Jeff Njija, and they're the other members of this tax appeals panel. All three judges will meet after today's hearing and produce a written decision as equal participants. Although the lead judge, myself, will conduct the hearing, any member of this panel may participate or otherwise ask questions to ensure that we have a complete record on appeal. For the record, will the parties at the table please state their names and who they represent, starting with representatives for the taxpayer?
Rudolph Paul Carmona, representing Carmona's Collision Repair.
Shahid Iqbal, CPA, representing our client.
Okay, would you please spell your name?
Shahid Iqbal, first name?
First and last name, please.
Okay, S as in Sam, SHAHIDNIQVAL, Q as in Queen.
Okay, thank you. And for CDTFA?
I'm Lisa Renati. To my left is Jason Parker, and to his left is Christopher Brooks.
Okay, great. So I understand that there is just going to be one witness today, and that's Mr. Carmona. Is that still the case, or does any party have any additional witnesses they intend to call?
No, that would be it.
Okay, and does CDTFA have any objection to hearing testimony from Mr. Carmona today?
No.
Great. So and onto the exhibits. I believe so last week on the 17th, I received 4 exhibits from the taxpayer. The first being individual income tax returns for 2008 to 2012. The second exhibit that we received were corporate income tax returns for the corporation for tax years 2012 and 2013. The third exhibit, and these I'm just going by emails. There are 4 emails. I'm just numbering them sequentially. Exhibit 3 is repair orders and estimates for selected transactions, and I believe there were 6 transactions that were received. Just to pause for a moment, I believe these are also contained in CDTFA's exhibits. The repair orders, have you had an opportunity to look at that, or are these the same as your exhibits? Or?
The repair order information is included in our exhibits, yes.
Okay, great. And then the 4th exhibit that I received was a 1-page profit and loss statement. Does that accurately reflect the exhibits that were submitted prior to today's hearing?
Yes, Honor. Yes, Your Honor. Yes. It is a combined P&L, so you don't have to go through the 5 years of tax return. So I've consolidated everything on 1 page.
Okay.
It's a combined profit and loss statement.
Thank you. And has CDTFA had an opportunity to review, and have they received all of these exhibits?
Yes, Your Honor. Could you restate what the first one was, though?
The first exhibit was the email with the individual income tax returns for Mr. Carmona for 2008 to 2012.
Thank you.
Sure. And we'll start with those 4 exhibits. Does CDTFA have any objections to admitting any of those 4 exhibits into the record?
Yes, Your Honor. We object to all of them. They were untimely.
Okay. So with these 4 exhibits, generally we do have the 15-day rule that the exhibits have to be submitted 15 days prior to the hearing. I did mention that at the conference, but the taxpayer did mention that they were going to be submitting these exhibits, and it looks like some of them are, CDTFA already has a copy of them in their own exhibits.
Your Honor, also you had required that they provide us with the exhibit list in advance, because they should have known what the exhibits were. So we told them, even if they did not have the exhibits produced, they should provide the exhibit list, so we would at least know what was being provided. And yet today, we still received additional documents.
Right, I understand that. With these first 4 exhibits, they do seem relevant, the tax returns and the repair orders, and that they are all duplicated to some extent in CDTFA's exhibits. So,
Your Honor, just let me interrupt you, but certainly Exhibit 2 has not been provided before.
Right, I understand. My thinking was to allow these first 4 exhibits, but to also allow CDTFA 15 days after the hearing to raise any concerns that they have with anything that might be contained in these first 4 exhibits. Does that sound, does any party have an objection to that?
Your Honor, the department doesn't necessarily agree that being allowed 15 days afterwards necessarily protects our interests, but we would, beyond that, we would just comply with that, if that's what you
Okay.
deem appropriate.
Okay, thank you.
Your Honor, 3 of the exhibits are already in their paperwork, that it's like a duplicate. And I did it for the purpose of being at the top of the pile, so when I reference it, they don't have to go through 3,000 pages to find what I'm talking about. So the ROs,
Right.
the P&L based on the tax returns, it's all part of their 3,000 pages of evidence that they've acquired over the past 6 years.
Oh, yes, I understand, and I am allowing your exhibits. I'm just giving CDTFA an opportunity to, after the hearing, to raise any concerns that they had with the returns, because as I understand it, they weren't previously submitted. So I will be allowing these first 4 exhibits. I'd like to go over onto the next documents. I believe I received 7-ish pages today. And does CDTFA have any objection to the exhibits that were handed out this morning?
Yes, Your Honor, obviously there are ways being provided today without any prior email or any request for additional time to do that. Also, we get no indication of what these documents, what their sources are, when they were created.
Okay.
There seems to be some information about intentions to cross-examine the department. We would obviously object to that, it's inappropriate.
Okay, and I may ask with the taxpayer, I did mention the 15-day deadline, and I don't think these documents were referenced during our pre-hearing conference. And do you have an explanation for why these were submitted so late in the process?
Yes, I do. I'm going to start with the email to the auditor, which has a date and timestamp. It's a copy of the email to the auditor, and it's kind of my opening statement in a brief. From the beginning of the audit, we made clear where we stood on this, and me and the auditor, Mala Wadla, had several email exchanges back and forth. And so I'm bringing it, not knowing if she would be here, I'm bringing it to the attention of the prosecution to show them that what we've been talking about throughout the process.
Okay. And these other documents, they appear to be just, so I have the Write It Up guide, cross-examining guide, the DOE audit history, the insure.com explanations for car insurance claims, the document that you just referred to, and the repair order 4025, and I believe the only difference from the one that's in the record is this one has handwritten notes explaining the concern that you have with it.
Yes.
Okay, so with these documents, these are all in the nature of argument, and some of them aren't really relevant to us. For example, the cross-examine guide, Write It Up. And keeping that in mind, and with our 15-day deadline, I am going to exclude these documents that were submitted today However, you have your opportunity to provide testimony, and that is when you can make your statements, like your opening argument that's summarized here. So that would be your opportunity to say what you want to say about this. We don't really need these documents, so that's why I'm going to exclude these ones as the timely documents that were submitted today.
Can I speak to the document?
Okay, certainly.
They write it up as from the Bureau of Automotive Repair,
Okay.
and throughout the process, we are governed by that Bureau of Automotive Repair, and basically it's just citing the laws of the Bureau of Automotive Repair of how we operate. I don't believe the auditor knows enough about our business and how it operates to accurately come up with the figures. So I'm stating basically the laws on the books that govern us and how and why we do what we do and why our paperwork is the way it is.
Okay, so with the law summaries, that's not something that we would admit as evidence. You've submitted it, we have a copy of it, and we can review it. You know, we can do our own research in the law. It's not something that you admit as an exhibit, but we will consider what the applicable law is. So that's why I'm not taking this as an exhibit, but I will consider what the applicable law is as summarized. This is basically more in the nature of a brief than an exhibit. Right now, we're just doing over exhibits. Okay. With that said, I've admitted exhibits 1 through 4 for the taxpayer as just summarized, subject to CDTFA having 15 days following today's hearing to raise any concerns that they have with the information contained in exhibits 1 through 4. The documents that were submitted today at 10 o'clock a.m. are not being admitted as evidence as exhibits. But they are noted, and we will be able to take into consideration the applicable law for the insurance repair as provided in the write-it-up report. With that said, I'll move on to CDTFA's exhibits. I've received exhibits A through F from CDTFA, consisting of 113 pages, 115 pages for exhibits A through C, and 940 pages for exhibits D through F, and those are basically the documents that are described in our minutes and orders that was sent out. The CDTFA have any new exhibits to add today?
No, but can you tell me how many pages in the first exhibit?
Oh, I'm sorry, 13, 15?
Yes, thank you. Yes, that's correct.
Okay. Yeah. Okay, so does the taxpayer have any concerns or objections to CDTFA's exhibits?
No.
Okay, so CDTFA's exhibits A through F are admitted into the record. And I did have one procedural clarification. I noticed CDTFA submitted a copy of the notices of determination and the decisions that are being appealed previously to OTA, but I don't believe either party has offered that as an exhibit. Is that correct?
That's correct.
Okay, and I don't believe you've offered it as an exhibit either, the decision that you're appealing from CDTFA.
We did not.
Okay, so just as a procedural matter, OTA would need to refer to the decision or the notice of determination in any decision that we issue. So OTA intends to take official notice of those documents, the NOD, the notice of determination, and the decision, just for the limited purposes, basically, of noticing the procedural history of this appeal. Basically, a decision was issued and what the amounts were and the dates that it was issued. And the liabilities asserted by CDTFA. That's the only purpose that we're taking official notice of those decisions. Does either party have an objection to that?
We have no objection.
Okay, great. So there's no further action required by either party because this is a part of a document that's been submitted to CDTFA. I just had to make that procedural clarification. So with that said, I believe we are ready. Does any party have any questions before we start going into the opening presentations?
I have a question.
Okay.
And it might sound really off the wall, but do I have to prove I'm innocent or have to prove I'm guilty?
Oh, so in these cases, generally, CDTFA just has an initial burden to show that there's a liability. After that, the burden is on the taxpayer to prove that an adjustment is warranted. The taxpayer's presentation will be first because in this case, the taxpayer generally has the burden. of showing that an adjustment is warranted to the liability as asserted by CDTFA. And that's why we're gonna have the opening presentation, starting with the taxpayer first.
Do I get an opportunity to ask questions?
So CDTFA has not provided any witnesses that will be testifying under oath. If there were witnesses testifying under oath, you would have an opportunity to ask questions. Like, for example, if they called an auditor as a witness, they haven't done so. So we only have one witness today, that was Mr. Carmona. And so CDTFA will have an opportunity to ask you questions, but then there's no one for you to ask questions of CDTFA.
Okay.
Okay. So with that said, I believe we're about ready to go into opening presentations. Basically, what will happen is, I understand the taxpayer will start with a 15-minute opening presentation. CDTFA will have 30 minutes for their opening presentation. And then after that, we'll call Mr. Carmona as a witness for his testimony, followed by questions by either CDTFA, and also the panel may ask questions at this point before we go into closing arguments. With that said, is the taxpayer, are you ready to do your opening presentation?
Yes, please.
Okay, please proceed.
Your Honor, I was involved, being a CPA for Mr. Carmona, I was not involved in the initial audit. I became his CPA in 2014, about a year after audit, and it was already being done, like all of the reports were already prepared. So I was representing to him on the hearing process and all that. So I just wanted to let you know I was not involved in preparation or keeping the books and records back in 2008 to 2013, I would say 14. So I became his CPA in January of 2015. So I will have a very limited knowledge about this case, but since I was involved, but I was not involved in the field examination with the auditor Mara. And so I will try to, if you have any question on accounting standpoint, tax standpoint, I will be giving my presentation. So basically, I am trying to wrap up this case since it was before my legacy. So that's why I'm here, to help to analyze the number. I was not involved in any conversation with the field examiner, auditor, or the client. It was way before my time. So that was the initial comment. And the second thing is, the person who was preparing the sales tax return, preparing the corporate tax return, and Mr. Carmona was a Schedule C back then. So I think he incorporated somewhere in 12 or end of December of 2011. So basically the 2012 was the first full-blown year, and then audit stopped at the first quarter of 2013. So I believe those preparers were not the CPAs, they were just the bookkeeper. And you know, there is a different scope of work, like you have the surgeon, medical doctor, then the nurse, physician assistant, nurse practitioner. So I concluded, based on my review of all of these reports, that the preparer, like we do his accounting now, we do his tax return now, we prepare his sales tax return, we prepare his corporate tax return, like everything has a check and balance. If we see Rudy, the deposit doesn't reconcile, so we always ask him. So in the past, he was maintaining the books once a year, and that's pretty much it. So his operation was not as big, maybe not organized. So I told him that, look, if I would like to take over you as a new client, so we need to dissolve it. So he went ahead, dissolved the old corporation, and then we are, so we would like to start fresh. So I know what I am doing, and I will be taking the full responsibility once the new LLC was born. I believe it was 2015. So he went ahead and dissolved that old corporation, and we start fresh. and you look at it, thank God, everything is exactly to the penny, no problem with the CDTFA, and because we do have a different education, different level of education, different level of analyzing the numbers, and I want to make sure the 4 quarter of the sales tax return are equal to the corporate tax return. You know, there is a different way of like, I want to make sure my cost of goods sold based on sales tax return or my P&L matches with his ROs. These kind of things, you know, we are continuously working with his in-house bookkeeper. If we have any question, we ask them. And plus we are doing his books on a monthly basis. So it's much easier. I can control the number on a monthly basis than file quarterly sales tax return instead of lumping everything in one sales tax return, or maybe the quarterly sales tax return but one profit and loss statement, Schedule C, or a corporation. So honestly, since I came on board, we have taken care of his books, very fresh, brand new LLC, no problem whatsoever. You can see that it's still CDTFA is extremely happy. No, all the numbers are back and forth reconciled. All the cost of goods sold has been reconciled with the ROs and then back to the P&L. So that basically I have a very limited knowledge since I was not involved with the audit examination or the field audit. So it was all way after me. So he came to know me with another friend of him that he was looking for a CPA. So he came to me and he wanted me to, Your Honor, take over this case wherever the field examination was finished and then move on. So that was my very brief summary of my presentation of today's hearing.
Okay, so are you finished with your opening presentation?
Yes, Your Honor.
Okay, thank you. City TFA, you now have 30 minutes to do your opening presentation.
Thank you. The appellants owned and operated a car repair and body shop in Fullerton, California as a sole proprietor from 1995 through 2011. In 2012, the business was incorporated as Carmona's Collision Repair Incorporated. The department conducted concurrent audits of the accounts of both the sole proprietor and the corporation. The audit period for the sole proprietor was for the period of October 1st, 2008 through December 31st, 2011, and the audit period of the corporation was January 1st, 2012 through March 31st, 2013. During the audit examinations, the appellant provided limited records to support reported amounts. The only records provided during the audit period and appeal were federal income tax returns for years 2008 through 2011, bank statements for October 1st, 2008 through December 31st, 2011, job folders for 3rd quarter 11 and 4th quarter 2012, purchase invoices which were purported to cover the periods of 3rd quarter 11 and 4th quarter 12. No sales journals, purchase journals, sales tax return worksheets, or other books and records were made available. A review of the reported sales per appellant sales and use tax returns on Exhibit A, page 35, and Exhibit D, page 23. I should mention, when I numbered the exhibits, they originally were separate, so the new exhibits D through F will start with 1 again. So I think you mentioned that, but I want to make sure that's clear. So the sales and use tax returns are on Exhibit A, 35, and D, page 23. So a review of those returns reveals that reported taxable sales appear to be estimates, as the amounts noted are round, whole numbers such as 16,000, 10,000, 12,000, and the like. An analysis of federal income tax returns provided for the sole proprietorship show that purchases for federal income tax returns were approximately twice the amount of reported taxable sales. And that's on Exhibit A, page 74. A markup of cost analysis using reported taxable sales and purchases for federal income tax returns shows a negative markup of cost of negative 46.52% for the 3-year period. And that's on Exhibit A, page 72. A negative markup of cost means that taxable sales reported to the department are significantly less than the appellant's cost of parts used to repair vehicles. Based on the initial analysis, the department determined that part sales were understated. Additionally, during last Friday, we received the tax returns for 2012 and 2013 for the corporation, and we note that the markup for those 2 periods is a negative 23.82%. In order to calculate audited taxable measure, the department performed a block sample of 3rd quarter 2011 transactions for the audit of the sole proprietor, and that's on Exhibit A, page 42 to 46. Originally, the test results were to be used for both audits, but at the request of the appellant, a separate test of transactions for the period of fourth quarter 2012 was used for the corporation, and that's on Exhibit D, page 937 to 938. Oh, that number is probably wrong, it's my old numbering. It's Exhibit D, it's scheduled 12-3A. The appellants maintain job folders for each repair transaction. The job folders contained estimates, repair orders, purchase invoices for parts, sublet bills, and/or copies of checks and credit card payments from customers and insurance companies. And since the appellant did not provide us a sales journal or a purchase journal or other summary records, the department was unable to tell if all job folders for the test periods were included or all purchases were included. The department reviewed and scanned all documentation contained in the job folders and has included all scanned documents with the department's exhibits B and D. During our review of the job folders, we found that many of the job folders were incomplete and did not contain a repair order or a purchase invoice for all items sold. Or if there was a repair order, there was no detailed listing of the individual parts sold. Oftentimes, instead of a separate repair order, there was simply a handwritten notation on the estimate with new totals for parts and labor. And the department noted multiple instances where the total amount per estimate matched or was similar to the total amount due for the repair orders, but the allocation of parts versus labor had changed so that the majority of amounts were now allocated to labor instead of taxable parts. Since the repair estimates were the only consistent source of information with detailed parts, labor, and tax amounts listed, the department transcribed these amounts to calculate the taxable parts percentage versus the labor percentage for all repair jobs. Since the department noted that the total monies received was sometimes less than the total amount for the estimate or repair order, the department used the total consideration received from customers for each test period as gross receipts. The audited taxable percentage of parts was then applied to total consideration to arrive at audited taxable sales for each test period. A comparison of audited taxable sales to reported taxable sales revealed material differences, and a percentage of error was developed to project the errors. During the audit examination, the appellant said the reason there was a difference between the total parts reported and the amounts per estimates was due to approved changes to the repair jobs. The appellant provided an explanation of the changes and provided adjusted amount to the allocation of charges to parts versus labor for the third quarter 2011 test. And you can see that on Exhibit A, page 48 to 58. The department performed further analysis of the test periods and made adjustments as warranted. Specifically for the 100 transactions for third quarter 2011, 24 of the repair orders were accepted, meaning the appellant provided substantive documentation, which the department accepted, or the amounts noted for the department and appellant's analysis were the same. 7 of the orders included sublet charges, claimed as exempt labor, but a review of the purchase invoices showed the amounts included parts subject to tax. These can be found in Exhibit A as Repair Order 3060, Repair Order 3570, Repair Order 3611, Repair Order 8160, Repair Order 8177, Repair Order 8185, and Repair Order 8244. 38 of the 100 invoices included repairs paid by insurance companies. While the number of jobs paid for by insurance companies are less than half of all repair orders during the test period, the amount of money received from insurance companies represents 72% of all monies received. That is, $92,921 were paid by insurance companies versus the $128,459 total consideration received. The appellants claimed the amounts per estimates provided to the insurance companies were renegotiated and the taxable sale of parts was reduced. However, the total amount due from the insurance companies, per the appellant's written estimates, were the same amounts used by the insurance companies to make payment. The amount due was based on total charges for parts, labor, and sales tax, less the amount of deductible owed by the vehicle owner customer. No documentation has been presented to support written approval by the insurance companies of any modification to the amounts as required by Regulation 1546B5. The only detailed listing of parts sold for the third quarter 11 test period was on the estimate. California Business and Professions Codes 9884.8 and California Code of Regulations 3356C2 require a detailed listing of all parts sold. Therefore, for all sales paid by insurance companies, the taxable percentage of parts and sublet labor, with parts in the sublet labor, for the approved estimate was used. Regarding the 31 remaining repair orders, the department found the appellants may have allowed their customers a discount, but the reduction was only applied to the charges for parts without a corresponding reduction of labor charges. For instance, repair order 3080, which can be found on Exhibit A, page 109 through 113. The repair order indicates a discount was provided, but most of the discount was applied to the taxable portion. Without any proof, less taxable items were sold. Another example is repair order 8123, Exhibit A, page 126 through 1132. Here, the total amount due for the original estimate remained the same at $114, but the charges for the parts decreased and the labor charges increased. The department also noted instances where the appellant adjusted the repair so that the amount for parts was equal or less than cost of the parts. Those can be found on repair order 3561, repair order 3563, and repair order 3576. For those, we noted that those had parts equal or less than cost. The department also found sublet charges claimed as exempt, but a review of the invoices shows that the parts were included on the sublet charges. And I think I've mentioned those in the past. There were 7 of them. For fourth quarter 2002, the results of the testing were very similar to that of third quarter 2011, with sales to insurance companies, failure to include all taxable parts in the repair orders, parts were claimed at cost, and claimed reductions applied inequitably to parts rather than both parts and labor. Of the 83 transactions tested, 13 transactions were accepted. Either the allocation was correct or the taxpayer was able to provide documentation to make the adjustments. 10 of the jobs included sublet charges claimed as exempt when taxable parts were included for a total of $870 in parts. Those were repair order 4003, 4023, 4031, 4033, 4311, 42120, 42140, 43090, 43260, and 43560. 63% of the total revenue received for the test period was from insurance companies. The appellant did not provide any proof for these transactions that the insurance companies approved the reallocation of charges from parts to labor, or any decision to refurbish rather than replace the damaged parts. For 73% of the jobs, the total amount received from customers and insurance companies was substantially the same amount as the estimate, but the allocation for parts was less and the labor charges were greater on the repair orders. There were also repair orders which included the parts charges at cost or less than cost, such as repair order 4003, where the deposit of $200 was not included, and repair order 41970, where the part was just charged at cost only without a markup. Or there were parts invoices in the job folder, but they were not listed on the repair order at all, and such as repair order 3994, where on page 156, the taxpayer purchased rims, but those weren't included or sold on the repair order. The appellant's federal income tax returns do not include beginning or ending inventory amounts. If you look at Exhibit A, page 74, you'll see that. The fact is not unexpected, as it is common for body shops to buy the specific parts needed to repair vehicles for each job. But based on the negative markup of cost, the department has already established the taxable sale parts per appellant's sales and use tax returns are understated. And without summary books and records, the department is unable to determine if all parts sold were even included in the test or have been accounted for. An analysis of the audited taxable sale of parts established in the audit findings and purchases per federal income tax returns for the period of 2009 through 2011 reveals an overall taxable markup of cost of only 6.41% for the 3-year period. An audited markup of 6.14% is far less than the markups achieved in other audits of similar businesses, and is less than the 20% markup claimed by the corporation, which demonstrates the reasonableness of the department's audit findings. Further, using total gross sales from the federal income tax returns for the sole proprietor and the audited taxable parts percentage for third quarter 11, estimated total taxable measure for years 2009 through 2011 would be around $666,500, but the audited taxable measure for the same period is only $442,764, for a difference of almost $224,000 in the appellant's favor. Similar results were noted using gross sales and the taxable percentage for the corporation, which shows the audit findings were less than what would be calculated using IRS information. This demonstrates our findings are reasonable, and it is likely the appellant has additional taxable revenue for which was reported to the IRS, but was not included in our test results. Another analysis which is telling is a simple analysis of the department's transcription of taxable parts fabrication labor for third quarter 2011. That's on Exhibit A, page 41. The total amount of parts sales per estimates was about $63,000. This amount, once reduced to cost, using the appellant's purported 20% markup, would extrapolate to an estimated yearly parts purchase amount of about $210,000. This is close to appellant's reported federal income tax return purchases for year 2011 of $215,152. In comparison, the appellant's summary of taxable sales for third quarter 11 test period was only $27,500. That's on Exhibit A, page 47. If this amount was reduced to cost, using the same 20% purported markup, an extrapolation amount for a yearly estimate would be less than half the amount claimed for federal income tax returns at $92,000. The law requires that auto repair shops must segregate the fair retail selling price of parts and materials.
I'm sorry, if you could slow down a little, I think our reporter is having a hard time keeping up. Just a little bit, thank you. Sorry for the interruption.
I won't go super slow.
Okay.
The law requires that auto repair shops must segregate the fair retail selling price of parts and materials from their charges for exempt labor on the invoices provided to customers and in their records. The appellants provided detailed estimates, including parts and labor amounts to all customers. However, no such detail is included on the majority of the documentation presented to support adjustment to the taxable measure noted on department testing. When a repair estimate is accepted in writing, such as those made with insurance companies, the subsequent modification to the bid agreement must also be in writing, per California Regulation 1546B5. Approximately 72% of revenue for the third quarter 11 test period and 63% of the revenue for the fourth quarter 2012 transactions involve amounts paid by insurance companies based on the estimates provided. Without summary books and records, we are unable to discern the exact amounts paid by customers on every repair order. The department provided the appellants with the benefit of the use of total amount of consideration received for handwritten notations, check copies, or credit card invoices in the calculation of audited taxable measure. Use of the total amount received allows for the possibility that adjustments were made to the original estimate. However, the appellants have not provided proof that the ratio of taxable parts to non-taxable labor charges were substantially altered. Therefore, the ratio of taxable to non-taxable charges, per the original calculations, are fair to be used to calculate audited taxable measure. As regards the 6 jobs that the appellants recently submitted, repair order 3985, that's included on Exhibit D, and we have pages 73 to 80. The appellant provided a discount from the original estimate of negative $82.54. In short, the deal went from owing the estimate said the complete job would cost $1,182.54, and it was renegotiated to an even $1,100. A review of the accounting for the discount was to reduce the parts charges by negative $212.12, increase labor by $145.63, and a reduction of tax of $14.95. The same number of parts were replaced for the estimate, repair order, and purchase invoices, so the appellant's reallocation is unsubstantiated. This transaction further supports the department's case that the appellant has failed to properly report their sales tax liability. Repair order 3987 can be found on Exhibit D, page 89 to 117. This is a transaction where the estimate and supplement total $5,266.96. The customer was responsible for $1,000 deductible. The insurance company paid $4,266.96. The customer paid $1,100 in cash because the appellant claims he renegotiated with the customer to adjust repairs and include additional repairs. First, the amounts paid by the insurance company for parts and sales tax are due to the state. There is no evidence the insurance company agreed to using lesser parts or refurbished parts for a lower sales price. Second, the simple tracing of parts purchases per invoices to parts listed on the repair order shows the appellant failed to include a part purchased for $116.90 on page 106. This part is not listed on the repair order, but the item is listed on the supplemental estimate on page 96, line 19. This transaction also supports the department's case that the appellant has failed to properly report their sales tax liability and has not accounted for all costs of parts. Repair order 3994 can be found in Exhibit D, page 149 to 159. This is a transaction involving an insurance company. An estimate for total parts and labor of $1,958.79, with a customer responsible for a $500 deductible. The insurance company paid their portion for the written insurance estimate in the amount of $458.79, which includes parts, labor, and tax. The appellant claims they renegotiated with the customer so that they would only have to pay $250 of the deductible, but there is no evidence the insurance company agreed to the adjustments of parts or labor. Additionally, a tracing of parts purchase invoices to the parts listed on the repair order finds that the rims, purchased for $120, are not included. And those rims can be found on page 156. This transaction supports the department's case that the retail selling price of all parts and supplies sold to customers have not been reported. Repair order 4007 is Exhibit D, page 306 to 330. This is another transaction involving an insurance company. This transaction also has missing parts, which were sold to a customer and claimed as sublet with a cost of $60. That can be found on page 322. Repair order 4011, Exhibit D, page 337 to 404, is also a sale to an insurance company with similar payments based on the written estimate. And repair order 4025, Exhibit D, page 538. The appellant claims this vehicle was a total loss, but there were substantial purchases of parts and no documentary evidence all parts were returned to vendors and were not instead included in the reimbursement of costs from the insurance company. And it should be noted this type of transaction was an abnormality in the testing. It's the only instance of a totaled car in either test period. While there were many jobs listed as labor only, storage, towing, or other similar charges, where the department included the transactions with amounts allocated only to exempt labor to ensure the percentage of parts was accurate, there were no other jobs where the appellant purchased parts in anticipation of completing a job and then later abandoning the repair. In summary, the department's evidence shows the records of the appellant and even their exhibits support the department's audit findings. And lastly, in the minutes and orders for this case, we requested the department provide additional information. Specifically, whether estimates were used in lieu of actual figures in the calculation of the liability. The department's calculations include an audited taxable percentage of parts sold and the actual total consideration received by the appellants. The audited percentage of taxable parts versus exempt repair labor was computed using the most reliable information available, which was most often the original estimate provided to customers and insurance companies. And for 72% of the third quarter 2011 revenue and 63% of the fourth quarter 2012 revenue, the written repair estimate was the document used by the insurance companies to make payments to the appellant. The second question you asked was whether the actual figures are readily available to calculate the liability. In short, the answer is no. For many sales, there was no repair order. Only the estimate was with handwritten notations. For job folders that included a repair order, most did not include a detailed listing of parts sold as required. There were multiple instances where the repair orders indicated that parts were sold at cost or less than cost when tax is due at the fair retail selling price. Sublot amounts for repair orders were always claimed as exempt labor when the department noted multiple instances of parts included in the charges. And when the appellants provided a discount, the discount was most always applied to the sale of parts rather than the entire job, which undermines the tax legally due to the state on the fair retail selling price of the parts. The third question you asked was whether it was reasonable to use information from the repair estimates in lieu of other information, such as information contained in the repair orders. Repair orders were simply not available for all transactions. For the third quarter to 2011 test period of the sole proprietor, 39% of all job folders had no repair order. The remaining 61% had repair orders with no detailed parts listing, and sublet parts were claimed as exempt. For the fourth quarter 2012 test period of the corporation, 43% of all job folders had no repair order. For the remaining 57%, the department found transactions with no detail of parts listed on the repair order, parts purchased per invoices which were not included on the repair order, and sublet parts claimed as exempt. The department's use of repair estimates is accurate for all sales paid by insurance companies, as there is no evidence that insurance companies agreed to adjust the repairs. And it should be noted again that the insurance company paid based on the stated amount for parts, labor, and tax. Also, the appellant claimed the repair order detail was used to report their taxable sales, but the department found that the overall markup of cost was negative, which demonstrates all parts were not being reported. The repair estimates included a list of all parts, corresponding labor charges, and sales tax. It is reasonable to presume the percentage of taxable versus exempt charges would remain relatively constant over the test periods. And a comparison of the audited taxable measure and purchases per appellant's federal income tax returns for 2009 through 2011 reveal a very low 6.41 markup percentage of cost. This demonstrates reasonableness of the findings. Additionally, with the submission last week of appellant's tax returns for 2012 and 2013, a computed markup for both periods is 15.6%, which is less than the 20% claim markup and proves that our results are reasonable. Based on the evidence presented, the department concludes audited taxable measure is reasonable, fair, and accounts for all parts sold. Therefore, the appellant's appeal should be denied. This concludes my presentation.
Okay, thank you. That was a lot of information, and I wondering if I could just ask a couple clarifications on your presentation. So, when you were talking about the repair orders that were submitted as an exhibit by the taxpayer last week on the 17th, specifically on 4025, and then
Yes.
also in the earlier ones, I believe you had mentioned that there were parts purchased or missing parts that were not included on the repair orders. So for example, on 4025, it has total loss written on it. Where are you getting the missing parts from? Is that from the estimate, or is that from other information in the file?
The department scanned the entire job folder, so within each, when you look in our exhibits under D, if it has a repair order, the entire job folder is included, and that would include the purchase invoices. So I traced the purchase invoices that were within the job folder, and then to their estimate, and then to the repair order.
So the department's saying that there, in addition to the repair order and the estimate, there's also purchase invoices from their suppliers of parts.
Correct, that's within the exhibits.
Okay, I believe the taxpayers wanted to say something, and we will, right after we finish with City DFA's presentation, I'll let you respond to anything that is raised here. I just had a couple questions that I wanted to get from them, and then I'll turn it over to you, so you just wait patiently for a minute. I think we're almost done with City DFA's turn. That's okay. Thanks. Okay, so, and in addition, I believe you were mentioning that there was computed negative markup in the fact that the department's position is the taxpayer was selling their parts for less than cost, but then, as I understand it, the federal income tax returns weren't provided until just last week. So how are you computing the negative markup? Was that just on an individual basis for job folders, or is there some other?
The tax returns for the sole proprietorship were provided during the audit period.
Oh, okay.
And so we had the negative markup for the sole proprietor. And those were provided, the only records that were provided were the income tax returns for 2008 through 2011, bank statements, job folders, and the purchase invoices within the job folders.
Oh, okay, so just to
And we calculated the markup using federal income tax returns purchases, not cost of sales, because we realized there was labor charges within their cost of sales calculation.
Okay, so I wasn't aware that, so your position is Exhibit 1 was actually already provided prior to, it's not an exhibit from the taxpayer, for you, but it was provided during the time of the audit.
Yes, and you can find that on Exhibit A, page 74, the tax return transcription. Well, we had a transcription of the returns with the file. I didn't have an actual copy of the returns.
Okay, thank you. And I'm just wondering if CDTF has a position on whether or not the taxpayer reported all the tax that they collected from the customers going off what was listed on the repair orders, or is that not something that CDTF examined in the audit?
I don't believe, if you could give me 1 second, please.
Okay.
For the fourth quarter 2011 test period, the recorded tax that we transcribed was $4,128.53, and the reported tax for the same period was $2,177. And for the sole proprietorship, one second. It's a large file. The sales tax for third quarter 2011 was $4,856.63, and they reported for the same period was $2,132.
Okay, just to clarify, this is going off what was recorded in the repair orders.
The repair estimates, yes.
Oh, that's estimates. Okay.
Well, the department, what the agreed upon amounts, some of them were agreed upon by the appellant, because as I mentioned in my presentation, there are many transactions where there was no difference between the appellant and the department.
Okay.
And I would hazard a guess that the reported tax was not accurate, since when you look at the sales tax returns, they're all round numbers. So if you're reporting 10,000, 12,000, and the taxpayers' jobs are not even numbers, and it doesn't appear that the amounts are even accurate. So I would say the sales tax was understated, but I can't provide you with those exact numbers.
Okay, I understand. Thank you. And if I'm just understanding your position with the audit, there's basically two different aspects. One is you looked at the repair orders, CDTFA looked at the repair orders, and for the audited total sales, they added up the total amount listed as received by the taxpayer on their own repair orders. So you're using their own records to come up with total sales. But then on the second aspect, when you're determining what ratio of that total sales are taxable, you looked at the estimates on the repair orders in order to calculate a taxable ratio. Is that?
Well, most of this, in the sole proprietor, most of the sales didn't have a repair order. Or if they did have a repair order, there was no detailed listing of parts.
Oh, I
so there was
understand.
no way of determining that. And in the corporation, a similar issue happened where there was no detailed listing or just a handwritten notation. So the department calculated the taxable percentage based on the test period, which includes estimates. And you're right, the total consideration received, it wasn't always based on what was on the repair order. There are copies of checks, copies of credit card receipts. They used that information for total monies received, for gross receipts.
Okay. And so with the new tax returns, I'm not sure how much time CDTFA has had to look at it, but you did mention a markup of, I think, 15% was.
No, a markup of 15% is our audited amounts using the purchases for 2012 and 13, with using a portion of 2013's purchases. There's a negative markup for using those returns of 23.82%.
Okay. And on the total sales amount, have you looked at that to see whether or not the gross receipts on the tax return track, at least the audited total sales from the period, or is that, I realize this is a new, at least for the corporation, a new
And that would be found on very quickly for you.
I don't understand the question.
So the gross receipt, well, no, actually it's very simple. The gross receipts for the 3-year period reported to the
I just want to say.
there you go.
3-year?
Yes.
You're asking for the 3-year period from 09 through 11?
Right.
Or in the newer returns for 12 and 13?
Oh, I hadn't, I guess either one. I was just curious if CDTFA had looked at that.
I would say the simple comparison, if you look at the 414M, which is the transcript of returns file,
Right.
it's much less than the amounts reported to the IRS.
Okay.
So even the gross receipts are much less. For the period, $453,000 roughly for the audit period for the sole proprietor, and in the same period we have, I think, 1.9 million reported to the IRS for 2008, 9, 10, and 12. Now remember, 8 we only have 1 quarter of 8, and there was a full quarter, a full year reported to the IRS. It's 1.9 million, so it's substantially different.
Okay, and I think the taxpayer asked, he didn't understand my question, or he didn't hear my question. I was just asking if the CDTF had looked at the amounts reported on the federal income tax returns to see if it was at least correlated to what they picked up as audited total sales for the sales and use tax purposes, to see if there was some relation, and that's what they were just responding to.
And I still don't understand, it's a 1.9 million gross sales for the three years and 1 quarter?
For 4 years of, may I answer?
Yes, please,
For
go ahead.
2008 through 2011, on your income tax returns, you reported gross sales of about $1.9 million.
Okay.
And then for sales and use tax returns, it was considerably less. It was 223,000. No, I didn't find those numbers. About 440,000 on the corporate. Sales tax returns reported about $140,000 to us, and you can look at the returns.
Right, and as far as how that corresponded to the audited total sales, was the audited total sales below, above, or in line with that?
Below would be below.
Okay.
Because in my presentation, I can repeat it again, I was speaking very fast at the time. Did an analysis, if we take the taxable parts that we noted per our estimates, and we applied it to federal income tax returns gross receipts, the actual amounts would be much greater that they would owe.
Okay, okay, thank you. Are there further questions? Okay. Okay, so at this point, we'll turn it over to the taxpayers. I believe they'll be calling Mr. Carmona as a witness, but before you do so, I'd like to swear you in. If you'd raise your right hand. Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, I do.
Okay, thank you. You may proceed with your testimony.
Per things that they were saying, can I address that?
You can use this time as you wish to speak to any matter within this case that you feel about.
Okay, then I'm going to first address the last two things that that they were brought up, which is RO 4025,
Okay.
and saying that they had copies of the entire file. Here's the entire file and copies. So when they made those copies, they also got the job notes of all the people we spoke to, all the parts were ordered, all the phone calls of the customers that said the car got totaled and all the parts were returned. So that the invoices were copies of parts that we bought thinking we were going to do the job. The car totaled, we sent all the parts back, and we charged storage and labor. On the one I gave you on the second page is a short audit of what we charged at $1,886 with no parts sales tax whatsoever. And in her audit and her audit work papers on the RO, they have $238 of sales tax owed on a job that we didn't do and parts we didn't buy. And this is a constant error on their behalf that they're charging me on estimates, not actual repair order or invoice. In her audit paperwork, she even calls the estimate an invoice. The estimate is not an invoice. And per the bar and the laws and the rules that govern us to how we do our work, we have to, an estimate is only an estimate. And on the estimate, it says in bold print, this is only an estimate, and actual changes to the repair may take place upon the actual repair of the vehicle. So they've taken all of the estimates and all the parts and tax listed on the estimates, which are not how we repaired the car, and applied the tax to the audit on parts I never bought. and here, it's the crux of the whole matter. And this is a glaring example of $238 of sales tax on parts returned and a job never done. And this is one example of 5 years of error that they're trying to apply to our business. They don't know how our business runs or operates. And this is only one example. But I'm going to move on to my opening statement. And I'm going to go to the email, because I have this is a shorter, more condensed version, and I'd like to save time. So, an email I wrote to Mala on September 21st, 2013. And hearing what was said by the prosecution is, I really don't understand half of what they're saying. And I say that again in the email. It says, my staff and I have gone over and over the paperwork, and I don't quite understand most of your notes on the spreadsheet. When my customers sign a repair order for me to do the repairs on their vehicles, I am entering a verbal and written agreement with them, not the insurance company. The vehicle owner is my customer, not the insurance company. Customers have the right to tell me what they want done to their vehicle and what they don't want done. The customers pay for insurance, and when they're paid on their claims, they are in the driver's seat and dictate to me what they want done to their vehicle. Many customers are paid direct and do one of two things: pocket the money and never fix their vehicle, or pocket the money and then shop for the cheapest repair they can find. How do you recover sales tax in those circumstances when parts were never bought? This is the exact same thing that happens when customers are asking to help them with their deductible or ask for extra work that wasn't on the original estimate. If we agree to help them, we get the job. If not, they will go somewhere else. I am paying sales tax on all the parts I am buying, and I am not paying sales tax on the parts I am not buying. The burden and pressure the state is putting on our company is unreasonable and not necessary. The state is chasing pennies from a tax-paying legitimate company while they are letting dollars get away from them from many illegitimate operations right on my street. 728, 740, 741, 748, 749, 806, 812 Williamson. I've told your agency and the many others multiple times if you'd enforce the rules on everybody and level the playing field, it would be a lot easier to compete and stay afloat. The competition right in my neighborhood has no license, no permits, no spray booths, don't pay sales tax, don't pay income tax, and can charge half the price I do, and I'm supposed to survive. The city squeezed nearly $10,000 out of us in a 5-year code enforcement ordeal, and OSHA is holding $144K in citations over us for ridiculous, frivolous violations. And your first audit is a $33,000 for penalties on parts I didn't buy, with a second audit to come. How are we supposed to stay in business? Should I let you put me out of business and resurface like a cockroach, like the neighbors do, and really cheat the system? Do you see the irony? I get penalized for playing by the rules, and every other agency turns their head, acting like what I'm saying isn't happening. Problem is, though, I work here and see it every day. The agencies come by once or twice a year and say, I don't see their address on my paperwork. I'm here to see you. What a sad state of reality. Many people say my only way out of this is to hire an attorney I can't afford. I'm not sure exactly what to do, but I do know God sees what's going on and He's the ultimate judge. Okay, and I'm going to speak to the time that this is going on, and this was written in 2013. Excuse me. Since the beginning of this audit to this very day, I've told the state auditor, Mala Wadla, that we've paid all the sales tax we owed and don't owe a penny more. I explained to her that during the recession, where over 200,000 small businesses closed according to the Small Business Census published July 26, 2012, that we were repairing parts rather than buying them, to save ourselves and the customers money. Saving parts is a term used in our industry, and it's converting parts to labor. And they don't understand that. I know they don't understand that. So if I have a $500 hood that I don't buy, I'm going to convert that to labor. And there's the crux of it, you know, part of the issue. Because we got to spend time and material on fixing the part and not buying it. During the recession, most people were not repairing their cars. It was groceries or car repairs, pay the rent or car repairs, keep the lights on or car repairs. Obviously, people chose basic survival over car repairs, and we were hit early and hard during the recession. Things were so bad for us that at this time we cut our salaries and laid off employees to survive. In survival mode, we changed our way of repairing cars. We saved parts, meaning we repaired most parts instead of replacing them. This became a way of doing business on a regular basis just to compete and capture jobs. You see, our location is on a street where about 80% of the body shops in our city are located in one area. Customers would go from shop to shop to find the best deal they could get, and I would literally watch potential customers take our estimate right across the street and leave their car with someone that had no license or permit or business in the city, or for any city for that matter. They're illegal operations. Before the recession, these hole-in-the-wall chop shops didn't matter to us since we were going in after different clientele. We had a different clientele of work. Once the recession hit, they became fierce competition that we had to compete with on a daily basis, and we would literally watch our estimates and potential jobs go to our unfair illegal competition. I once asked and complained to the Bureau of Automotive Repair when they were inspecting my shop, how come you don't go shut these illegal operations on our street down? As I pointed at them across the street. To my amazement, he said, if we give them a citation, they just pick up and move to another location, so we don't waste our time with them. I was completely and totally shocked. Through the years of complaining to the local and county agencies that govern us, I've been given about the same answer from all of them. So there is no real way of making the playing field even. Once again, during the recession, we repaired parts instead of replaced them to capture jobs, survive, and to stay in business. And then I wrote a subtitle, Win, the Win. When vehicle damage is appraised by an insurance company, one of three things can happen. The insured or claimant is steered to a contracted direct repair shop, also known as a DRP, and the vehicle and payment go directly to the DRP shop. The insurance company tells the client they can choose a shop of their choice, and payment for the car can be made directly to the client or to the client in the shop or directly to the shop. 3, a claimant third party, meaning their damage was caused by another party, can many times get paid directly by the at-fault insurance company to the car owner. So the payment's just being made to the person that owns the car, and then they go shop for whatever they want to do with the car or pocket the money, which happens a lot. The how. The insured party most of the time wants to save their deductible, and then the shops around for the company that will give them the best deal. The claimant many times gets paid directly by the insurance company and is shopping for the best deal also. Even though they are a claimant, they often bring their insurance estimate in as a starting point and then negotiate how much they can save off the original estimate. Either way, we are not a DRP shop directly contracted or under contract with any insurance company. We are a small independent shop, and once a customer signs an RO for repairs, we are entering a contract with that customer, not the insurance company. We currently have over 500 five-star reviews online because we give the customers what they ask for. If the customer wants to save money, which is most of them do, we tell them we'll repair parts instead of buying them to save the money. They usually agree and we'll get the job. By repairing parts and not buying them, we use much more consumable materials which are pre-taxed and not sold to the customer, which is also lowers our sales tax liability. I told Mala, which is the auditor, repeatedly, you can't charge me tax for parts I didn't buy. It's actually illegal to charge me tax on parts I did not buy. And then the crux of the matter. So here's what we've been arguing about for 6 years. MALA is trying to charge a sales tax on parts we did not buy based on estimates that say, that all estimates say this. This is a preliminary estimate. Additional changes to the estimate may be required for the actual repair. This is written in bold, underlined on repair estimates, like every software company that makes them. The changes we make to the estimates are recorded on the repair orders, ROs. The customers are in full agreement on the way we are repairing their cars for the discount. During the recession, this was about the only way we could capture a job. Deviate from the estimates, save parts, save money, and capture the job. Again, like I said, we don't have to pay tax on parts we did not buy, and we can't be charged tax based off of estimates we did not follow. The vehicle owner is our customer, not the insurance company. There is absolutely no proof that we owe sales tax we didn't pay. Where are the invoices of hundreds of thousands of dollars of parts I bought, sold, and didn't pay tax on? All MALA has is averages and formulas based on the industry as a whole. We are not your average shop, and we did what we had to do to survive the recession, and that was repair parts at a discount and not buy them to get the work and stay afloat. Last I checked in this country, you were innocent until proven guilty. It seems here I have the burden of proving my innocence. Guilt by accusation. That's all it is, and it is an accusation until you produce proof. Where is the smoking gun? Where are all the parts invoices on all the parts I bought and sold without paying sales tax? Well, there aren't any. And if I stood before 12 of my peers in a jury, I believe I'd be acquitted, or at the very least have a hung jury. So, Your Honor, all we are is a hardworking family from a long line of entrepreneur immigrants trying to make it in a competitive industry, doing our best to live the American dream. Upon doing much research in my defense and going to the Bureau of Automotive Repairs website, knowing the rules of that govern us, I can't find it. There. On the Bureau of Automotive website, Bureau of Automotive Repair website, which I submitted to you, and the third bullet point down on the top sheet, performing only the repairs authorized by the customer. Okay, so again, I'm entering a contract with the customer when they sign an RO. I'm obligated to do to their car what they tell me to do, and I can't do other. If I'm a DRP and I'm a direct repair contract shop, then I'm obligated and under contract to the insurance company to follow their rules and their estimate and do what they say and notify them if there are changes. I am not a direct repair shop. I'm an small independent contractor that our customers are our customers, not the insurance companies. Okay, so on the second page of that, down at number 4, is sales tax included in the estimate? No, sales tax is only included in the invoice. This is from the Bureau of Automotive Repair because they know so many changes are made in the process of a repair, whether the number goes up or down, which is a supplement. A supplement could go up or down in price. An RO, repair order, is an invoice. So they're taking estimates and all the sales tax off of the estimates and saying I'm 114% in error on tax I owe by parts I didn't buy. Everything is transferred to the ROs and all the parts are transferred to the ROs, like the copies that I showed you guys, that add that with a markup and the sales tax that's owed per the repair order, the invoice, not the estimate. The estimate is only an estimate, and it's not the invoice, and it's not where sales tax is collected by the Bureau of Automotive Repair. Okay, on the next page, in the footnotes, it says, an estimate provided by an insurance company may be attached to and referenced in an automotive repair dealer's estimate if it meets all applicable estimate requirements specified by the Bureau of Automotive Repair. Okay, so the estimates are questionable if they're going to be attached to if they meet all requirements. Going through all this paperwork, I found a State Farm estimate where they excluded this is only an estimate, actual changes to the estimate may be required upon the actual repair. That estimate is not legal because they deleted that phrase off of the estimate. Because under the Bureau of Automotive Repair, the customer has to be notified that in writing that it is only an estimate and it could change. So in that one file, I would throw that State Farm estimate out because it doesn't meet the Bureau of Automotive Repair requirement. And the things that they don't know about our business, but trying to hold us to the fire on parts we didn't buy. Okay, on the next page, in number 2, what is required in a work order? A work order must contain the authorized estimate for a specific job, the repairs requested by the customer, and the vehicle's odometer. Okay, so again, the estimate is questionable, but the repair order, which is signed and authorizes a repair, and the repairs that are requested by the customer. So again, the customer is my boss, not State Farm, not Auto Club, not Mercury. They're not knocking on my door saying, how did the repair go? I'm not a direct repair shop. You know, I answer to the customer. And I do to the car what they want done to the car. Can the method of repair, number 3 on the same page, can the method of repair of parts listed in the work order be changed? Yes, if the customer authorizes a change in the method of repair or part supplied, per the Bureau of Automotive Repair. This change can happen and does happen all the time. And like I said in my statement, we are in survival mode. The recession almost put us out of business. And we were doing everything we could to stay afloat. We laid off employees, we cut hours, we cut salaries. We cut salaries on guys that are still with us today, that got their pay reduced and toughed it out through all those hard times and then waited for it to get good again. And we're a family, small family business, and we did what it took to survive. On the next page, number 1, when is the invoice provided to the customer? The invoice, okay, this is very important. The invoice is provided to the customer upon the completion of all repairs for a specific job. It's not the estimate. It even says that that's not where they get the sales tax from. The Bureau of Automotive Repair says we do not get the sales tax from the estimate because the RO transfers everything that's actually done to the invoice that they get at the end of the job that shows everything that was put on the car that's subject to sales tax and then charged. And that's how we pay. That's how we did our sales tax returns, and that's how we came up with the monies we owed the state of California based on following the rules of the Bureau of Automotive Repair. So what I hear being said is so much conjecture based on formulas and averages of what the industry should be like. Well, the time of the recession was not normal for the industry. I'm one example of 200,000 small businesses closed during the recession years of that 08 to 12. You know, people pat us on the back that we survived that because a lot of people we knew went out of business at that time. And then the last thing is Insure.com. Stuff I've given you. And the main thing is the third-party claimants, okay, which is on the second page. If someone else smashes into your car and his or her insurance company is paying for the repairs, you are a third-party claimant. This is typically less of a hassle than a first-party claims because you have no obligation to that insurance company. The insurer can't dictate to whom it pays the money because it doesn't have a policy contract with you. In most third-party claims, insurers pay the claimant directly. If your vehicle has been totaled in a third-party claim situation, that's irrelevant. And then it says, knowing the claims process can help you expedite your repair. So the majority of our customers are third-party claimants. We are not a direct repair shop. A direct repair shop has insureds piped directly to the shop. And the shop is under contract with that insurance company to follow all those rules and regulations that the insurance company puts out per their estimate and how discounts they want, what they want done with the cars and how they want it all done. Okay, when we take in majority of third-party claimants, we are in a contract with the customer and we are doing exactly what the customer wants and only what the customer wants, and based on that and my ROs, which have attached, only the attached parts I bought for the jobs, I have proof that I paid everything I owe and I don't owe a penny more because I can't pay for tax on parts I did not buy.
Okay, thank you, and I do have questions for you. I believe there will be questions for you, but I just wanted to take a quick pause since it's getting close to lunch, and I believe we have representatives for Salton C and for Sully Green in the room. Does the court reporter, we're off the record for a moment, but yeah, are you comfortable moving on to Salton C after this, or did you want to put one?
I don't have to do much, but we can take a break.
So how about this? How about after this case, we're going to try and get to Salton C, but we're not going to be able to get to Sully Green before lunch. So if Sully Green and the reps want to come back at 1 o'clock, that would be fine. So you don't have, or you could sit and wait here if you want. I just wanted to give you the grace of. I don't think we're going to get to your case before lunch, so we'll let you come back at 1 o'clock if you want. Okay. So I believe I did want to ask you. Oh yeah, so yeah, we'll go back on the record. Thank you. And I do have questions for Mr. Carmona. So as I understand City of TFA's argument, what they're saying is that even if we threw out the estimates, they don't have a basis because they don't have repair orders for every transaction, so they don't have a basis basically to determine the taxable ratio for the transactions in the test period because there aren't repair orders for all the transactions in the test period. I believe their presentation was that 40% of the transactions were missing repair orders.
So to speak to that, when a job is, and this is an error on our part, like less than $500, okay? We call it burn a RO. We don't even burn a RO. You know, it's such a small amount that we would use an estimate. And those are usually, a lot of those are 6-digit ROs. Like on the worksheet, an RO is usually a 4-digit number for us. This is our internal way of doing it. When a 6-digit number comes up, we've usually used an estimate on a small dollar amount repair. But according to the Bureau of Automotive Repair, I'm still supposed to prepare or burn a RO, use a repair order. But in our, maybe not doing it to the T, on the very small ones, we use estimates. We go by our estimates. And those are all our written internal estimates, which our customers have nothing to do with insurance companies. They're just seeking us out, paying cash out of pocket, and coming to an agreement with us, just me and them. Nothing to do with insurance companies.
Okay, so I believe CDTFA has also asserted that if you just look at the total amount that the customers and insurance companies paid you during the periods that they looked at, that amount was significantly higher than the total reported transactions that were reported on the sales and use tax returns. So my understanding what they were trying to do is they were trying to get a percentage of what amount is taxable, non-taxable. So they had to calculate, or they determined that they were going to calculate the total amount that you received during that test period, and then they multiplied the taxable ratio by that to determine how much tax should be owed. And my understanding is they used the estimates because they didn't have sufficient documentation in the repair orders. Some of them were missing. And I guess I was just wondering if you have documentation, full documentation now for that, or if you have some way to address their concern of how are they going to determine a taxable ratio if there's repair orders missing, or if there's repair orders that, I believe they also said that some of the repair orders didn't include a sufficient detail.
Yeah, so going through, it's a lot of paperwork, and Mala did work with us. You know, she wasn't, I don't agree with her obviously, but she wasn't unreasonable, okay? So some of the repair orders had not been filled in, and so she said, okay, get all your paperwork in order. Okay, so we did fill in, we did take our, we did take our job notes. That's what does the customer want, we write down what they want, and then how did we fix the car, and we did transfer everything over to the ROs according to how we bought, how we agreed to repair the car and what did we buy. So the invoices were stapled to here, even if the RO wasn't filled out.
Oh, just when you were saying invoices, I thought before when you were saying invoices, you were referring to the repair order. Is there some other
No,
document?
parts invoices.
Oh,
parts
purchase of parts invoices.
Yes.
Okay, I get it.
So all the parts, even if the repair order wasn't fully filled out, the invoices for the parts bought for the car were still attached. And they took copies of everything. They copied everything.
Okay.
So she let me, because we went back and forth, and I said, wait a minute, you're trying to charge me for parts I didn't buy. She said, well, straighten out your paperwork, you know. So we went back and filled in everything according to how we repaired the car.
Okay, so for example, if I look at 3985, it's the first repair order that you had submitted as an exhibit. If you have that in front of you, I'm just trying to understand how the repair order works, and I'll give you a minute to find it.
3985?
Yeah, it's the very first repair order that you submitted last week as an exhibit.
Okay, 3985.
Okay, so I'm just trying to understand, so on the top left column, you have 4 OEM parts listed.
Mm-hmm.
The prices listed there, was that transcribed from your purchase invoice, or is that what are these prices?
From the, yeah, purchase invoice.
Okay, and then underneath that, you have a plus 20%,
Mm-hmm.
and that's a markup that?
Yeah, markup on parts.
Okay, and this is information that you added during the audit then?
Yeah, she, not every one. Some
Okay.
of the ROs were completely filled out, some
Okay.
of the small ticket items were estimates only without an RO, and some of the ROs, we started to fill them out but didn't finish them. And she said, hey, finish your paperwork, get it in order.
Okay, so I believe one contention that CTFA had raised was that if you look, for example, the very first part here in the repair order, it's listed as 5571, but then if you look at the estimate, that same part is listed as 7958, and the second one's listed as 74 here, and then in the original estimate it's listed as 10631, and that's going off the part numbers. I'm just wondering if you could briefly explain the change in parts. Is it how you got a different price? Is it how the price changed for that same part?
You mean price change from the estimate?
Right, so on the estimate, I think the city TF had mentioned that, so for example, if you look at the very first part, it says, 16020 5571 is listed. And then if you flip over to the next page, that same part, 16020 is listed as 7958.
Because that's the difference between the wholesale and the markup.
Okay,
Okay, so on the estimate, it shows the markup,
okay,
and on the, what we did for the customer, we discounted the part.
okay, so this
We
is.
bought it for $55, marked it up 20%, and that affects the whole number of the discount that we passed on to the customer.
Okay, I get it. And I think one other concern that they had raised was that, I think they said overall, you were selling parts below what your cost was. I'm wondering if you could briefly address that.
No, I think that there's so many numbers and formulas, and I have their worksheets, piles of them that they've configured, that I really don't know how they come up with their numbers.
Okay.
I really don't know, but what I do know is I bought a part for this price, I marked it up for this percent, and I paid the sales tax on what I actually did to the car. Everything outside of this, when you go to the estimate, is only an estimate. And I don't know how I can be charged sales tax on an estimate. It's not an invoice.
Oh, no, I understand what you're saying. I just wanted to make sure you were able to address the concerns that were raised by the other party. But speaking of that, I believe you had mentioned, the taxpayer had mentioned that at least on 4025, that was a total loss, and then I believe CDTFA's position had been that they had purchased the parts anyway, but if the taxpayer had come back on their turn and said that it shows that they were reimbursed for the parts. I think the file had said 11512 got checked for reimbursed parts 865. I'm just wondering if CDTFA has a position on that specific invoice, the 4025, or if that.
Well, on that invoice, we didn't have, we don't have proof the check was received because we don't have, we don't have copy, sales journals or any type of journals to prove the amounts. And also, it's merely a test. So we're just trying to get to taxable versus non-taxable, taking it, this is one transaction in a test, trying to come up with a number. The consideration received was used on the taxable numbers, but again, if you go through it, also, like I also mentioned, that was an aberration. There was no other jobs like that. We did have multiple jobs that were towing and storage only that were included completely in labor. And on this one, we didn't have proof that those parts were returned. So that's why we left it in.
Okay. I should turn it over to my co-panelists.
I want to say just to that one 4025, the one you're talking about, it's an oversight by the auditor. The auditor had copied everything. That's why you're reading it. The notes that say, hey, the parts were returned, the car was totaled, and an invoice was generated that's in the file of what we charged for. But again, she's so fixated on every estimate, and this is a tax on the estimate, and this is what you owe, and that's where me and her butted heads, and we did not see eye to eye that she's charging me for tax on parts I did not buy.
Okay, do you still have records from this time period, or is everything that is available what was submitted today, or I'm just out of.
I have what I have here.
Okay. Okay, and I think.
I guess I'll try and be brief. When you were talking about the packet where you included of the job folder where you included the invoice for parts that you returned, does the packet also include some like a receipt or something showing that you returned them?
Yeah. So in this RO, I don't have it, but I would have to go back to the dealership, which is, now it's how many years ago? But we don't want to keep parts. We want our money, we don't want to keep parts. The car's towed away to a wrecking yard. We're sending those parts back. We're not keeping those parts.
So how does someone know from looking at your paperwork that you returned the parts that you have an invoice for?
Because we have an invoice stating what we got. Let me look at we have an invoice stating what we charged and why did we charge it. It says zero tow bill, tear down on the vehicle, all labor, storage for the vehicle, and a total. This total matches the RO for the amount that we charged the insurance company on this total loss. They paid us the $1,886 even. So in the notes, where I refer to the notes, that say we're making phone calls now to the parts people saying, hey, we don't need these parts anymore. That's it. We don't, these invoices of the parts I ordered, I don't need to keep those. I don't want to keep those parts. I want my money back. I got paid, they took the car, the customer went and probably bought another car, and we're being charged in the audit for sales tax on an estimate when I have my proof. It's all right here.
Okay, thank you. I believe we're ready to go on to closing arguments at this point. CDTFA, would you like to do your closing presentation?
Yeah, I just wanted to bring a point to your attention. I know Mr. Carmona was relying upon documents that were excluded, but in particular, the information from the Right at Right document. We don't know what year this came from. We know it's not from 2008 or 2012, 2013, because it references a new regulation that was written in 2018. So the information he's relying upon, we can't necessarily rely upon, I think.
Okay. Thank you. Noted. With that said, I believe CDTFA, it's your turn for a closing presentation.
Okay, it's going to be very short.
Okay.
So the total purchases per income tax returns for all periods are greater than the amounts reported to the state. If you compare our audited results of trying to achieve the taxable part sales and compare that to reported purchases per federal income tax returns, the overall markup for the for both periods is 15.15%, which is very reasonable. The markup for the 3-year period of the sole proprietor is only 6.41%, which is extremely reasonable. Our results are merely trying to get at what taxable parts were sold, and the only records we have of all parts purchased is the income tax returns. So those are the amounts we are going to, if you just look at that simple analysis, it shows that our amounts are very reasonable. Additionally, the insurance companies, there are copies of checks from every insurance company payment in the folders and in our exhibits, and those include checks made directly to the taxpayer. And those checks were written and based off the written estimates the insurance companies received, which included parts, labor, and sales tax. And those amounts are due because the insurance companies did not provide written estimates, written changes, or written agreements that they were okay with the fact that the taxpayer was later, instead of using new parts, refurbishing or repairing those parts. The insurance companies paid for brand new parts. And that's, as an aside, with your insurance company, when they pay for repair, they're paying for it to continue collision coverage because you're replacing the part. So therefore, later on, they'll continue to cover your car for collision. So to say now that later on we change the part, I don't think it's something that would be fair, nor is it for the regulation allowable. And that concludes. Do you have anything you'd like to add? And that concludes.
Okay, thank you. For the taxpayer, Mr. Carmona, would you like to make any final closing arguments before we conclude today?
Your Honor, can I speak?
Yes.
Two things when I have examined the sole proprietorship sample auditor has taken, and honestly, I have tested every sales tax amount over $100. Your Honor, believe it or not, we went over, he brought the boxes and boxes in my office. Every single one which is like an audit, like I used to be an auditor, financial statement audit. So I have tested his ROs, any sales tax amount over $100, believe it or not, Your Honor, every ROs, every test auditor picked up based on estimates. And he is my witness, and I have the supporting document to make my statement that I said, this is not the same amount showing on the ROs. So I said, okay, I'm gonna test everything over $100 for sales tax. So that's one. Number two, when I used to be the auditor, whenever the sample testing is not coming out, okay, my partner CPA firm will say increase or expanding. What this auditor did, she tested 2011 quarter 3 and 2012 quarter 4. Your Honor, the error rate is 116% and blindly applied all of the 13th quarter without explaining her test. And on the corporation side, error rate was 75%. You have all of those records. She blindly applied for 5 quarters. Your Honor, you know, as an auditor, I was a financial statement auditor in a very large CPA firm, and always our partner asked us, if you feel that the numbers are not coming in line, expand your testing. Go for test 2 or 3 more quarters and see that how. Your Honor, you tell me, out of the 13th quarter, 116% rate field examiner has blindly applied all of the 13 quarters. And then on the corporation side, 5 quarters, and then she blindly applied 75%. That's why this sales tax audit amount became so huge because of that 116%. My question to the panel, why auditor did not expand her testing when she knew results are the numbers are so outrageous? Number two, Your Honor, the panel did not understand how does the accounting work. Cost of sale, I have the written proof, you have a copy. They never reported. How can he survive in business with a negative gross profit, even though what they are saying based on sales tax number is between the taxable sale, non-taxable sale, and labor. Very simple formula. My financial statement, you have the copy throughout, is showing an average of 63%. Number 3, there are certain material goes to the body shop, like for example, sandpaper, tape, you cover the plastic. All of that is basically customer doesn't take it. Your Honor, if I take my car him, he's not giving me the sandpaper. So my cost of goods sold will vary those items which he will not recoup. Mr. Carmona, would you agree with that? Like the tape, the plastic, the booster pump and all that stuff, the chemicals and the mask and all that stuff, which is associated with painting the job and all that.
They're called consumables, and we pay tax on them when we buy them.
Okay, thank you. With that said, the panel member is ready to conclude this hearing?
I didn't get to finish. Do I get to finish?
Oh, I'm sorry. Yeah, if you
Okay.
let me know when you're, yeah.
So based on consumables, so there's the 2 major estimate software companies are Mitchell and CCC. There are many others though. And so what they do is they create a formula. They say on this many paint hours times $32, you're gonna get your paint material. And then on the estimate, and this is why the bar doesn't use estimates for calculating sales tax. It lumps all the material into one figure, taxable, okay? So what the software company doesn't do is they don't filter out consumables. Because on my paint invoices, and some of my paint invoices are in those 3,000 documents, because I had to show the auditor, hey, I'm paying tax on materials. When I buy them, I'm not selling them to the customer, they're consumables. So on the income tax statement that they're saying don't match the sales tax reports, consumables are in that, in the financial statement, that 30% of the paint material that says I owe tax on, I pay tax when I buy it, I use it up in my shop as waste, and it never gets sold to the customer. So we don't, when we transfer to an RO, we don't transfer that sales tax that we prepaid on consumables. Tape, plastic, sandpaper, breathing masks. I mean, we have a huge list of consumable materials that the software writers are putting in as sales tax that we're not selling to the customer. So the Bureau of Automotive Repair said, and write it, the estimates are not used to compute sales tax. And the auditor used only the estimates to compute the sales tax and come up with the error percentages of all this money I'm supposed to owe when it's not even accurate or true or correct. So what I told Mahler, we're splitting hairs. We're splitting hairs here on a legitimate business that's doing all it can to make it, and they're letting our unfair illegal competition get away with murder. I just can't believe I'm even here. 6 years of this, and I have sleepless nights, I have acne, I have all these things like a teenager because this is like destroying my life. You know, I want my life back. I want this to be over with, and we paid what we owed. And however they mix that pot over there, they can come up with any kind of stew they want to put out on the table. But I know what we did in our shop, day to day, week to week, month to month, year to year, to come up with how did we fix the cars, how did we survive, what did we buy, what did we resell, what do we owe sales tax on, and what do we not. And I refused with Mala, the auditor, we just were at the table arm wrestling, and we both refused to give. You know, she's saying, you owe it, and I say, I don't. I'm not gonna pay sales tax on parts I didn't buy. Here's my proof. Here's all the invoices attached to the RO that has the sales tax and the markup and everything I did to the car. So I don't know what else to say but to say that it'll be a great day when all this, for me, when all this is over. Really. I've been dragging a boat anchor around for 6 years. That's all I got.
Okay, is everyone ready to conclude this hearing? Okay, with that said, thank you everyone for coming in. This case is submitted I'm sorry, actually the record is going to be held open for 15 days so that SBTFA will have an opportunity to follow any concerns that they have with the new exhibits that were submitted after the deadline. After that, you'll expect to see a decision within 100 days.
The department doesn't need to keep the record open.
Oh, okay, great. So this case is submitted today on 1/24/2020. The party should expect to receive a decision within 100 days. Thank you everyone for coming in. The judges will meet after this and decide your case later on, and we'll send the written decision to you. So with that said, we're ready to adjourn. Let's take a 5-minute break before we move on to the next bill matter. Thank you.
Thank you, Your Honor.
Thank you, Your Honor.
But do you want to switch spots
Oh,
first?
guys, definitely, well, it's not even here, you're already done. I just need to take one of them.
We are now ready to resume. We are ready to do the appeal of Salton Ventures Inc., case ID 18053175. It is 12:15.
And we are now on the record for the Office of Tax Appeals oral hearing for the appeal of Salton Ventures Inc. This is OTA case number 18053175. We're in Cerritos, California on Friday, January 24th, 2020. The time is approximately 12:16 p.m. My name is Suzanne Brown, and I am the lead administrative law judge for this hearing, and my fellow co-panelists are Andrew Quee and Jeff Angija. First, I will ask the parties to identify themselves for the record, and we'll start with the taxpayer. Ms. Hernandez, you can go ahead. Just state your first and last names and your role here as representative.
Carmen Hernandez, representing Salton Ventures.
And for CDTFA, please.
My name is Lisa Renati. To my left is Jason Parker, and to his left is Christopher Brooks.
Thank you, everybody. And is your client going to be joining you at the table?
I'm here, but I wasn't going to speak.
Okay, that is up to you. Right. I will just briefly revisit that we held a pre-hearing conference in this matter, and everyone should have received my pre-hearing conference minutes and orders that just briefly summarized what we discussed and confirmed that the issue in this appeal is whether appellant has shown that further adjustments are warranted to the audited understatements of reported taxable sales. We discussed during the pre-hearing conference that neither party intends to call any witnesses. And we also discussed the exhibits, the documentary exhibits, and everyone has submitted their exhibit lists, and my office has prepared and sent you a courtesy copy of our exhibit binder that contains all of your documentary exhibits, and everyone should have received that. And we have marked appellant's exhibits 1 through 8, and we have marked CDTFA's exhibits A through H. And it was my understanding during the pre-hearing conference that it didn't sound like anyone anticipated having any objection to admission of those documents at the hearing. So first I will just confirm, Ms. Hernandez, do you have any objection to admission of CDTFA's exhibits?
No.
And CDTFA, do you have any objection to admission of appellant's exhibits?
No, we do not.
Okay. Then I will say that I will admit appellant's exhibits 1 through 8 and CDTFA's exhibits A through H. Those are admitted into evidence. All right, and I'll just briefly go over our schedule for our hearing today, and then we will proceed, and I'll hear your arguments. We agreed that appellant will have up to 20 minutes to present its case, and the judges may ask questions. And then CDTFA will have up to 15 minutes to present its case, and the judges may also ask questions. And then appellant will have the opportunity to make a rebuttal argument. I believe I said that would also be up to 15 minutes, and then the judges may ask questions of either party. Does anyone have any questions about the timeline or the process of how this is going to proceed today? Okay, thank you. All right, then, if no one has any questions and everyone is ready, then I will say that taxpayer may proceed with its presentation. Ms. Hernandez, you have 20 minutes, or up to 20 minutes.
I originally started working on this audit in May of 2013, which Mr. Daniel Ibarra had started the audit before that. He was with CDTFA. We were going back and forth for a while since he didn't fully understand the audit or the sales tax returns. He also mentioned he was still in training, so his part of the audit it took a while. After that, it was re-audited again. I want to say I think it was in October of 2015, because we kept on not agreeing with any audit findings because they weren't taking the Schedule G into consideration in the S audit return. So the Schedule G consists of all the prepaid sales tax on the gas dumped at the station, which Salton Sea Ventures should be able to claim that. And they did so in the original tax returns, but they were erroneously done. And that was my concern with the auditors, that, you know, those returns weren't correct, and the Schedule G had to be amended and the returns reconstructed. Mr. Daniel Barra didn't have any knowledge of that, so he said he would have to go back and ask and see if anyone else can help him with that portion. Now forwarding to 2015, on the first re-audit, Schedule G still wasn't taken into consideration, so Salton Sea Ventures hired Mr. Patrick Leon, and he scheduled a meeting with a couple of people from BOE, I'm sorry, not BOE, formerly BOE with CDTFA, to go over the Schedule G and understand the CFN sales. And that was with Mr. Daniel, Casey, Stephen, and Ann of CDTFA. They asked me to reconstruct the returns with the full backup from SOGO, which is the gas distributor. So we did, put everything in Excel because it's a huge amount of receipts and invoices and taxes and all that good stuff. After it was reconstructed, we submitted everything, and we had a board hearing, a board meeting, with, again, Ms. Ann, Stephen, and Casey. Daniel wasn't there. And they decided not to take the reconstruction into consideration, even though the Schedule G was done erroneously from the beginning. And I told the auditor back in 2013 that, you know, if the credits weren't applied correctly because they weren't done correctly to begin with. Fast forward to 2017 or 16, I believe it was Ms. Ando who concluded the second re-audit, so now it's the third time they're auditing, and this is due to them finding errors on their side, on CDTFA's side, not on our side. We've complied with everything. They asked us to make payments, monthly payments, sign forms left and right. We've done everything just to stay on track with everything they've asked for and to be in compliance. So in 2016, Ms. Ando went through the re-audit again, and she did see the credits. She did state she saw the credits, but the SG will not be taken into consideration because of the statute of limitation. So what I'm asking is that I understand the statute of limitation won't take the Schedule G, but it was stretched out this far because of CDTFA, not because of Salton Sea Ventures.
Does that conclude your presentation?
Yes.
Okay. Now CDTFA may make its presentation. Oh, actually, I guess I should stop for questions. Or not yet?
I'll wait until after CDT, I guess.
Okay, that sounds good. Go ahead.
Okay, thank you. The appellant operates a gas station with a mini-mart in Thermal, California under seller's permit number 101-189-123. At the same business address, the appellant also operates a card lock fuel station as a distributor of fuel, including wholesale sales to other vendors. The appellant was issued SG account number 78020-920 for the collection of the prepayment of tax from other vendors and to claim a credit for prepaid tax paid to their suppliers. The department performed a sales and use tax audit of the retail sales account for the period of February 26, 2009 through December 31st, 2011. The department's audit findings were determined on March 6, 2014. The department also audited appellant's separate SG account for the period of January 1st, 2010 through December 31st, 2011. The audit of the SG account resulted in a credit. The audit of the SG account did not include periods in year 2009 because the department did not obtain a timely waiver of statute of limitations. For that reason, the department did not issue a notice of determination for appellant's SG account for 2009. Further, the appellant did not timely file a claim for refund for the SG account for 2009. The time for filing a claim for refund for 2009 for appellant's SG account has long expired. Pursuant to Revenue and Taxation Code Section 6902, Subdivision A, a claim for refund must be filed within 3 years from the last day of the month following the close of the quarterly period for which the overpayment was made, within 6 months from the date the determination becomes final, or within 6 months from the date of overpayment, whichever period expires the later. In this case, the period at issue is year 2009, which is clearly outside of the deadlines provided by Section 6902, and for which no determination was ever issued. Therefore, there is no credit due to the appellant on its SG account for 2009, and there is no refund available to the appellant that would offset appellant's sales and use tax liability in this appeal. Appellant's Exhibits 5, 6, and 7 represent unverified reconstructed sales and use tax returns. Source documentation has not been provided to verify the accuracy of these returns. In preparation for this hearing, the department summarized the appellant's reconstructed returns and compared the appellant's proposed taxable measure and proposed total Schedule G credits with the original tax returns filed on Exhibit E, page 9 and 10. The total taxable measure per the reconstructed returns is far greater than the amounts originally reported and are greater than the total audited taxable measure per the current audit findings. Specifically, the reported taxable measure per their original returns on Exhibit E, page 9, is $25,491,941. The audited taxable measure per the audit findings on Exhibit E, page 17, is $27,715,297. But the total taxable measure for the reconstructed returns on line 11, if you add up all the line 12s, is $31,649,239. This is a difference of about over $3.9 million, which is more than the audited taxable measure subject to this appeal. Regarding the Schedule G credits for the reconstructed returns, the audited prepaid credits allowed in the audit were $1,372 in tax on Exhibit E, page 52, column F plus column C. The prepaid tax credits requested for the reconstructed Schedule Gs, which is line 20, is $1,332,167. Thus, the department's audit findings provide a greater Schedule G tax offset in the reconstructed returns by $39,834. The department's audit findings are based on a reconciliation of the appellant's profit and loss statements, transcribed on Exhibit E, page 41 to 44, supported by point of sale records, transcribed on Exhibit E, page 46 to 48. The department's audit's results are not only reasonable, but they are lower than the amount which would be due using the appellant's reconstructed returns. Accordingly, the department requests the appellant's appeal be denied. This concludes my presentation, and I'm available to answer any questions.
Yes, I just want, I'm sorry. Hello? Hi, I just wanted to make sure I understand your position. So the appeal before us is the sales and use tax account, and then there's an audited deficiency there. But then for your SG permit for the prepaid fuel sales, you have amended returns, reconstructed returns, which show a net claimed overpayment, and you want to offset that overpayment for the underpayment on your seller's permit. Is that correct? I just summarize it.
It boils down to that, but the Schedule G is part of the SR return.
Right. There's the Schedule G for the retail transactions, and then the wholesale transactions under the SG permit.
Well, it's not just the wholesale on the Schedule G. That's not correct. It's all the fuel that was purchased. When they purchase fuel off that invoice, they pay it's a prepayment that they pay, whether it's for wholesale or retail.
Okay, but I'm just trying to understand the overpayment, the prepaid fuels tax credits that you're claiming. Though, are you alleging that it should have been under your sales and use tax account, or do you concede that? Oh, so you believe that you're entitled to a credit for prepaid fuels tax under Schedule G of your sales and use tax account?
Yes, that's correct.
So you're not. So you're saying that the statute of limitations is not an issue because you should be allowed credit under your seller's permit.
I understand the statute of limitation, but what I'm saying is, this audit was stretched out for so long, not by us not complying, not by Salton not complying, but by CDTFA re-auditing and you know, due to, I don't want to say errors because it sounds bad, but that's, you know, there's emails saying they found different things, they accidentally claimed taxes twice, and I'm not even fighting the total sales because we did go off their financials. I went off every single day, so it took forever. And I saw how they just estimated, if you look at their Exhibit 4, page 1 of 1, it's just broken down as estimates. That's fine, I don't have a problem with that. My only concern is to be able to use the credits on Schedule G. I don't feel it's Salton C's fault that the statute of limitation time passed when the audit kept on going for so many years, not because we asked for it to go for so many, but because CDTFA kept on, you know, finding.
Okay, so if I'm just trying to see if you guys are both on the same page, and are you saying that you want to be allowed to claim these credits in Schedule G, but normally you understand that it would be claimed on the SG permit, or are you saying that you should actually be entitled to claim it under SG under normal circumstances?
It should be claimed on the SR return.
Okay, and because my understanding is CDTFA is saying that these credits should be claimed on the SG return, not Schedule G of the sales and use tax return. Can I clarify? Are we talking about the same thing, or?
Well, there are two things. One is Schedule G on the SR permit is only for the prepaid sales tax on fuel that was sold at retail. And then the Schedule G for the SG permit would be where they would claim the prepaid tax on those that they sold at wholesale. So I think that we are talking both returns.
Okay.
If you look at Exhibit 5, page 5 of 11, just for an example, if you look at the sales tax prepaid fuel, where's it Schedule G, line 20?
I'm sorry, I'm still scrolling down
It's
to
okay, I know it's
Exhibit
a lot.
5,
Line 20.
line 20. Exhibit 5. Line, oh, what page is Exhibit 5?
Page 5 of 11.
Oh, 511, sorry. I had to pull, I had the wrong
It's
page
page
up, line
12
20,
of the,
okay.
it's page 12 of the PDF, if that helps.
Okay, right, and so you're requesting, if I understand correctly, you're requesting to claim an amount on line, a deduction on line 20. And CDTFA is saying that the amounts that you claim are for CFN sales or for wholesale transactions that should be claimed on a schedule to the SG permit, not on the SR permit, is that?
That does come from the Schedule G.
Right, okay.
And if I can clarify, if you look at the instructions for preparing the Schedule G, I know those aren't included, but you can look them up.
Right.
It says, note, only prepayments made on fuel sold at retail should be claimed on this schedule.
Okay.
Okay, so you'll see the Schedule G, which is page 11 of 11 of Exhibit 5.
Okay.
Now, I know it's a little confusing, and this is what we went back and forth with, starting with Mr. Daniel Ibarra as well as all the other auditors, is that CFN is wholesale, but the way it's conducted, it's really not wholesale. They distribute the, let's just say for an invoice, which is all the fuel that they dump at the gas station, and Salton Sea Ventures still has to pay that invoice. They don't pay it at a wholesale price without prepaid taxes. They pay the prepaid sales tax on those on that fuel that was dumped. Then it's sold at when truck drivers have a CFN card or whatnot. The amount that's sold through that, it's still at retail. It's not at wholesale.
Okay, I understand the issue now, thank you. And just to clarify, since the CDTFA is asserting the claim for refund would be barred, did your client do anything prior to expiration of the 3-year period that could be considered as filing a claim for refund, like filing an amended return, filing a form, not necessarily the claim for refund form? Have you done anything that you think could potentially be considered within the time period as filing a claim for refund for this amount?
We did talk to Mr. Ibarra back then. Again, he had to get help because he was still in training for this. It was not something he fully understood. We did, what was it? He just asked for more time. We did submit amendments. I don't think they were taken into consideration because everything's still the same. Then after that, it was just really just hanging on to whatever CDTFA would guide us on.
Okay, and in addition to this, are there any other issues, or is the only issue amounts claimed that you're requesting to claim on Schedule G of the SR permit?
Yeah, that's
Okay.
all it is.
Oh, thank you, I understand.
May I explain one thing, or am I allowed to testify since that's...
Okay.
Well, I guess he can appear as a representative of himself.
Well, I'm 100% the
Okay.
owner, but
Right, right. Why don't you come up to the table, please?
Okay, and you can swear me in
Yeah,
and...
and, we'll just address that later. If I can please have you state, in the microphone, state your name, your first and last name.
Dennis Rieger, R-I-E-G-E-R. I'm the president of Salton City Venture. And
Let me stop you for just a second. We had not identified any witnesses. Witnesses are supposed to be identified 15 days beforehand, so my inclination is that I'm not going to have Mr. Rieger testify. I will just, you're making arguments.
okay.
But if you want to amend and say that you would like to have him testify as a witness, I can consider that and I can let CDTFA respond.
Well, I was just going to explain the season.
All right, let me stop for just a second. Are you asking that he testify or just make arguments?
Go ahead.
Yes, that he testifies.
All right, let me ask CDTFA, this is a late addition to call this witness. Do you have an objection?
Can we take a brief break?
Yes, we can go off the record briefly.
Thanks.
Yeah, so I can the breakdown on the season.
If we're ready, we can go back on the record.
Yes, right.
Yes, go ahead. Do you object to Mr. Rieger testifying as a witness?
No, Your Honor.
Okay. If there's no objection, I will swear in Mr. Rieger as a witness, and I'm just going to make the distinction that I was going to allow Mr. Rieger to make an argument as a representative, as the owner of the company, but it would not be under oath, just like the representatives here were making arguments but not testifying under oath. However, Mr. Rieger, if you're going to testify as a witness, I will swear you in, and your statements will be under oath. If you could stand, please. Do you swear or affirm that the testimony you are about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Okay, thank you. Okay, go ahead, you may testify.
I have zero accounting background, and that's why I wasn't going to speak today. This is all very confusing to me, as it was to the 3 different auditors that we went through to try to explain and try to get an understanding. CFN is a wholesale gas group. We make a nickel a gallon for putting it through our pumps. They claim the sales and everything. And so that's where the whole argument on this whole audit is. Daniel Rivera didn't understand it, and the other 2 auditors didn't understand it. So I mean, we went around and round, and I don't understand it as an owner. So I mean, it was hard for all of us. So I mean, that's why the audit took so long. And then they say, well, yeah, you paid that money in, but you can't take credit for it because the statute of limitations expired. Well, it didn't expire as far as I'm concerned, because from day number 1, we were trying to get this solved, and it was the DOE they kept postponing it, bringing in a different auditor to see if they could figure it out. We went through 3 major audits and 3 different people. And then they just said, well, you're too late. So, but they did at one of our meetings say, yeah, go ahead and resubmit it and all that, and we'll take it under advisement. We resubmitted it and they just still turned it down. So, and the reason they got our money is they took it out of our bank account. And I kept screaming, you're taking more money than I'm even making a month. And finally they stopped. But it's as a layman, and I'm very naive, it was a tough struggle. That's basically all I have to say.
I will now, if that concludes Mr. Rieger's testimony, I will now allow any cross-examination of the witness by CDTFA.
We have no questions.
Okay. Then I may have some questions. I guess I first want to make sure I understand taxpayers' argument. We've kind of gone over the statute of limitations, and Mr. Hernandez, I understand you're explaining you understand the statute of limitations. Is there some authority that you can point me to that would allow me to say that the statute of limitations, the 3-year statute of limitations here doesn't apply, or was told, or is there something that you want us to consider that has not been raised?
Yes, I would like for you guys to consider the time that it took the auditors to understand the audit, first of all, before they even submitted their findings. And after the first finding, they re-audited and submitted more findings on their side. Again, not errors from Salton, but findings they found that they were duplicating taxes and sales and all that. So I don't think the statute of limitations should stand.
And then I guess I want to pick up on something that I heard that CDTFA was arguing that, well actually let me turn to CDTFA. I understand you're arguing that essentially the taxpayer would be owing a greater amount if we considered their reconstructed returns.
That's correct.
Okay. Then, Ms. Hernandez, can you address why? I assume you disagree with that. Can you?
Yes.
Can you just give me a synopsis of why that's incorrect?
Because I have not, in the reconstructions, our sales match. There's nothing that doesn't match. The only thing that doesn't match is the Schedule G. So there's no reason for the sales to be even more based on the reconstruction. Unless they're not taking the resale into consideration, which is the CFN. That's the only thing I could think of, but it's on the reconstruction, and there's no reason for Salton to owe more.
Co-panelists?
So, at the risk of looking stupid, I will ask my question, and I can either try to ask the background facts to figure out if I've got a valid question, or I'll start with the question and you can tell me why I'm crazy for thinking it. For instance, I would want to know what's the time period of the liability of the deficiency that got assessed and didn't include this quarter, because my question ultimately gets to why not allow a time-barred offset? I'm sure there's a good reason, because nobody seems to have mentioned it in my review of the file.
The audit of the SR permit included 2000, started, was February 26, 2009 through December 31st, 2011.
Okay.
In which the department got a timely waiver. The SG permit audit started later, and that one was for January 1st, 2010 through December 31st, 2011.
Okay,
The department didn't have a waiver for the 2009 period, so they couldn't include that. For the separate SG account, it requires a separate waiver of limitation.
the liability period that they want to offset the SG overpayment, and I realize you challenged the measure of that as well as, let's just assume for our purposes of my question, it's all related to retail sales. And I know CFN is complicated to track that. Let's just assume it is. So it's otherwise available. Statute of limitations bars it. Would it apply to the 2009 period? You know, you can have an offset. You don't get a refund, but you can at least offset against an asserted liability. I think Owens, I forget the name of the case.
Well, and if you look at the audit work papers, the auditor, so when you do the Schedule G reconciliation, you're supposed to use what they report on their returns, and then you're supposed to compare it to their gallons sold.
Right.
In this case, the department used the ad hoc report. And the ad hoc report is our internal report that includes all purchases. So the department has used, for lack of a better word, the wrong report. They used a report that includes more sales than they're allowed to have an SG credit for. So the department has already given them that credit in 2009.
Okay. To the extent that there's an offset possible, your position is that it's been allowed.
It's already been allowed.
I don't have any questions.
Any questions? I think technically we are at the point of, oh, thank you. Technically we're at the point of taxpayers' rebuttal. Ms. Hernandez, do you have anything further that you would like to argue as a rebuttal, or have you covered everything?
No, yes, she stated in 2009, the audit for 2009, again, she stated that they didn't use the SG. My argument is, how are you going to complete an SR return without the SG when that's the way to complete a SR return, at least for gas stations? And also the credits that were given based on their audit, based on CDTFA's audit, they're lower than the reconstructed. So the credits weren't given, not the correct credits, I should say, for 2009.
And that concludes your rebuttal?
Yes.
Okay, and anything further from CGTFA? No, okay. Then all right, then if I've heard all the arguments, I will, and everyone has concluded their presentations, then I will say that this hearing is concluded. And as you all know, we will now take the matter, the panel will now take the matter under advisement, and we will issue a written decision within 100 days of today. Okay? And so this matter is concluded, and I'm now going to call a short break of half an hour. Okay. We're off the record on this matter. So it's 10. I'm sorry?
I don't know what mine.
She had said 25. She had said 25 minutes. You wanted to say it's half an hour. Okay. Great. So it's 12:50. Why don't we say we'll reconvene at 1:15?
Sure.
Okay. The next hearing for Sully Green Inc. will reconvene at 1:15 p.m. Thank you, everyone.
Thank you. Can we just start the record right away, please? Thank you. Good afternoon, everybody. We are here today at OTA's hearing room in Cerritos, California, to take evidence and hear argument in the appeal of Sully Green Inc., OTA case number 1805317. Today is January 24th, 2020, and the time is approximately
118. I am joined on the panel today by my colleagues, Judges Cui and Tay, and while as lead, I will be doing most of the talking, at least during these introductory comments. We three will decide the issues with each of us having an equal vote. Our stenographer attempts to take down everything that is said on the record, and to help us make a clear record, I'm going to ask everyone to please speak clearly and slowly. Do not speak while someone else is speaking. And if something is said out loud in this room while we are on the record, it will be included in the transcript. So if you wish to have a private conversation among yourselves or between representatives and a party, I suggest you speak very quietly or ask to go off the record or ask for a break to leave the room and have that conversation. Let's begin with the parties stating their appearances. Who's here to represent the appellant?
My name is Russell Davis. I'm attorney for appellants.
Thank you, Mr. Davis. And who's with you today?
I have, on behalf of the taxpayer, I have Neil Sullivan to my right, and on my left, CPA Kevin Cahill.
Thank you. Welcome, gentlemen.
Thank you.
And who is here to represent the California Department of Tax and Fee Administration?
My name is Chad Backus. To my left is Scott Claremont. To his left is Jason Parker.
Thank you. Welcome, gentlemen. All right. This is an appeal from a decision and recommendation and a subsequent supplemental decision issued by respondent department, denying in part appellant's petition for redetermination of a notice of determination that was issued, excuse me for a moment.
I'm sorry, I just need to check one thing.
Okay. That was issued on October 11th, 2012 for the period January 16th, 2009 through December 31st, 2011. The notice of determination determined a liability of $71,221.65 in tax, accrued interest, and a 10% negligence penalty, which penalty has since been deleted by the department. The notice of determination was based on an August 3rd, 2012 audit report that determined a deficiency measure of $829,490, consisting of two items: unreported taxable sales measured by $1,514,488, and unclaimed deductions for tax paid purchases resold measured by $684,958. It's my understanding that the overarching issue is whether appellant is entitled to adjustments to the measure of unreported taxable sales. We discussed this in our pre-hearing conference, but included within that issue are sub-issues which are identified in appellant's contentions as follows. First, the appellant contends that the department erred in classifying the custom wood shutters as fixtures. The appellant alleges that the shutter components are materials which are incorporated into the real property, losing their identity to become an integral and inseparable part of the real property. On this basis, appellant alleges that it correctly paid tax on its cost of the materials used to construct the shutters and that no additional tax is due. To the extent the department argues that appellant's position is contrary to the California Code of Regulations, Title 18, Section 1521, appellant contends that that regulation is unconstitutionally vague. Alternatively, and only in the event this panel is not persuaded by appellant's arguments just stated and concludes that the shutters are fixtures, appellant argues that the credit allowed by the department for tax-paid purchases incorporated into the shutters is based on erroneous assumptions and is incorrect. Mr. Russell, let me ask you first. Have I fairly stated the issues that you wish this panel to consider?
Generally, yes, that's correct, Your Honor, with explanation on our have.
Let's have the explanation now so that I can cover it.
It would be part of my opening. What you said is what has transpired so far.
Okay. Have I identified the issues correctly?
Yes, I see it as, number one, a legal issue in calculating the taxable measure, and if we're wrong on that, we have objections to the calculation. So I see that as the two matters before us.
Okay. Department, from your perspective, have you stated the issues as you understand them to be?
Yes.
There was some suggestion in the documents that I've reviewed, we've all reviewed, we on the dais, that the appellant argues, or has at least argued in the past, that it is entitled to some relief based on reasonable reliance on written advice from the board. Is that an issue, Mr. Russell?
I think not, Your Honor. We reported a different way, and it was approved the way we reported previously. I don't have something written other than it was accepted. I have letters of acceptance of our method of reporting.
Do you intend to cover that matter in evidence or to argue that? Because if you do, it should be identified up front as an issue in this case.
It is an exhibit that we have listed, Your Honor.
Are you arguing that your client reasonably relied on prior written advice?
I guess I'm having trouble with the word written advice. What we had is the audit was approved, and within the way we reported it, it was accepted with no change. That may be considered something what we certainly did rely on, and certainly verbal acceptance and acceptance of the reporting of the tax returns.
There are provisions in the law that include reliance on a prior audit, and if your contention is that based upon written information contained in that prior audit or the prior audit work papers, then I think I should probably include that as an issue we will be covering. Are you contending that there was action taken by the department in a prior audit, an audit prior to the one at issue, that your client reasonably relied upon to treat his cost of materials the way he did in the current audit?
There's a technicality, Your Honor, and I don't want to mislead the court. It was one corporation and became a different corporation, a different company. So it may be that the reliance by one corporation on advice given to the other corporation, even though the shareholders were the same, may not be acceptable as a defense of this. But nonetheless, what we have is a taxpayer in the same business, and then a new business, a new corporation was formed years later, and they just went back and reported it the same way they did in the previous years. And it was notified, the Board of Equalization was notified of the way it was reported, it was audited, and there was a no change.
I think that I'm going to indicate that you are presenting this as an issue. Reliance on prior written advice. You can make your arguments, present whatever evidence you have in support of that, because there are circumstances where there may be separate companies with common ownership, some degree of common ownership, where that argument can find support in evidence. So I'm going to include that as an issue we're covering in this hearing, and my recollection is it was covered in one of the decisions written at the department level. We'll include it as an issue here, and you can present whatever evidence and argument you have. Let's talk about the evidence. The appellant has offered 30 exhibits that number approximately 242 pages. Those exhibits have been marked 1 through 30 for identification, and they are included in the hearing binder, a digital version of which has been supplied to the parties. I believe my pre-hearing conference order required parties to state objections to proffered evidence several days ago. I don't have no record of having received any objections. Department, do you have any objections to the 30 exhibits that the appellant has offered?
No, we do not.
Those 30 exhibits are admitted. The department, before I get to the department, appellant also indicated during pre-hearing conference that he was going to call 2 witnesses, and those are the 2 gentlemen he identified who are with him at the table. Do you still intend to call those witnesses?
Yes, Your Honor.
All right. Do you have any physical evidence today that is not covered within the exhibits now admitted 1 through 30? Do you have any other physical evidence that you brought with you today that you want to have offered into evidence?
Yes, Your Honor. Whether it's offered into evidence or not, they are panel shutters to illustrate to the panel what we're talking about. And I'm not sure how they're offered into evidence, but it would be helpful for understanding of the issues.
It's been suggested that we could take a photo of it. However, it sounds to me like you want to use this as demonstrable evidence.
Yes, Your Honor.
I don't intend to carry a shutter back with me to Sacramento, and I don't think I need to.
It's small enough it'll fit in your car.
You mean we have
Yeah,
to take
I'm
it
not
back
driving
with
to
us?
Sacramento, but why don't we hold off on whether we're going to admit anything connected with that? We'll see how you use it. You're going to use it during your examination of your witnesses. Let's wait and see. I doubt seriously we'll need to have it admitted, but my colleagues and I will confer, and we'll decide whether it should be admitted a little later in this proceeding. Do you have any other evidence today that we have not already discussed?
I do not.
All right. Turning to the department has offered 5 exhibits that have been marked Exhibits A through E for identification. Exhibits A through D number approximately 114 pages, but Exhibit E is the audit work papers, which can sometimes number in the 1,000, and frankly, I did not count the number of pages in that exhibit, and I don't intend to. Again, copies of those exhibits were included in the digital hearing binder that was provided to the parties, and I asked Mr. Russell to state objections to any of those proffered exhibits several days ago. I think it was June 21st. Mr. Russell, do you have any objection to the admission of the department's offered exhibits A through E?
Are those exhibits that were just offered within the last week or so?
They were all, well, they were offered during the briefing phase, and we included them in the binder that we talked about during our pre-hearing conference, and that would have been, you should have received an email that told you the binder was available for download at a website. I'm not sure whether you did that, but it was there, and all the documents you or your clients have seen.
I did not receive such an email with the binder. I did put in a call to Claudia Lopez asking where it was. I did not get a call back.
Okay. Department, did you get an email about a download?
We did last Friday.
Was it, can you tell me whether, can you call it up and tell me whether Mr. Davis's email was listed on the, usually they send it to everybody together. Let me look and see what I have. I might actually be able to pull it up. And it's, even if we pull it up and find that you're listed, that's not going to resolve our problem of making sure you have copies.
It was sent to ataxdoc@aol.com for Mr. Russell Davis.
Say it again?
The email address that it was sent to was
No, it's ataxdoc is mine. ataxdoc@aol.com.
Yes.
That's where it was sent.
Oh, it was.
That's what
I
they
think
said.
that I'm not going to have an objection.
Okay. Do you want me, you don't have a computer with you, do you?
I do not.
Okay, then I'm not gonna bother sending, wouldn't do you any good for me to send you a copy now, would it? Okay.
But for what's sent, maybe it went into spam and I missed it.
Possibly. All right, no objections you've indicated. Those documents are also admitted. Let me get back to where I was. Does the department have any other physical evidence today that was not included within its exhibits A through E?
We do not. We're trying to figure out with the new issue of reliance on the prior audit, just trying to make sure that some evidence that we do have was included in whether it's appellant's evidence or our evidence. So we just want to make sure that we have evidence to submit or to present on today.
Can we, let's do this. You can do whatever you need to do to make that determination, and at the end of today's proceedings, because it is somewhat of a new issue, because from my perspective, it wasn't clearly identified by Mr. Russell in his briefing, but I saw that it was discussed in the decisions issued at the department level, and I thought, I and my colleagues decided we needed to clarify, and it may be that Mr. Russell, at the end of the day, will not be presenting the argument in the sense that I understand it, but I will leave it open for the department. In the interim, can look through whatever documents it has, can listen to Mr. Russell's argument and determine what documents he makes reference to. And if the department needs some additional time to make sure that it has submitted all the documents it wishes to submit to address that issue, we will give additional time.
Okay, thank you.
Does the department have any, other than that, any other additional documents that you have today that you wish to offer into evidence?
No, we do not.
And does the department have any live witnesses?
We do not.
All right. Because the appellant plans to call 2 live witnesses, I typically allow an opening statement, and I believe I told the parties during our pre-hearing conference that I typically allow short opening statements for the sole purpose of outlining those witnesses' testimony very briefly, and to the extent necessary, making reference perhaps to the physical evidence that the witnesses plan to make reference to. It's not mandatory. Mr. Russell, we are all lawyers up here on the dais. We are all familiar with the files. Don't feel you have to give us a guide, but if you want to, I will allow it. Did you want to give an opening statement?
I would, Your Honor.
All right, and let's keep it brief, less than 10 minutes certainly, and department, I'll give you an opportunity when he's done, should you want to make one. Go ahead, Mr. Russell.
Thank you, Your Honor. Basically, again, my client's business is manufacturing shutters. And distinctly from most other shutter companies, this shutter company makes their shutters from scratch. They buy the raw lumber, they buy whatever is needed to piece these pieces together and make a shutter custom to the measurements of each customer. The majority, overwhelming majority, almost all other shutter companies buy the fabricated boxes and install them. So I bring that up only to understand that there's a distinction in the way they're taxed. Prior to this company being formed, there was another company formed in 1991 called Sullivan Shutters, owned by the same principal, Bob Sullivan. Bob Sullivan is now deceased. The gentleman on my right is Neil Sullivan, who was the son who was taken over the business. When the company first came out, they reported tax differently. Tax at that time, the way to calculate the taxable measure, according to the code, is if a contractor is a manufacturer of the fixture, the taxable measure is based upon the cost of price, which is sold to other contractors. When they had an audit back in the early 90s, 93, 94, 95, That's how they arrived at the taxable measure, because they sold to other contractors at the time. Since that time, the company got bigger, and they no longer were selling to other contractors. So it had to be a new way to determine the cost price for the taxable measure. And what happened is they were audited in 2001, 2, and 3, and the auditor then, it was a very complicated calculation doing it the old way, and the discussion with the auditor, who was Wayne Lovett, agreed that they could calculate the tax, or the taxable measure, if the tax were prepaid. In other words, they went out and bought all the lumber, they bought it out of state, they paid a use tax, they bought everything they did was tax prepaid. All the tax was paid, and it was then reported that way. In 1999 is when they changed their method of reporting, sent a letter to the Board of Equalization and said, we're changing our format. This is how we're going to do it now. They were then audited for the few years after that, 2001, 2, and 3, and the auditor accepted it. It went to the district principal, Carl Hirth, who was in Riverside, and he accepted it. It was all accepted. This was the method of doing it. It was agreed with the auditor. He was delighted it could be done this way because it was so complicated to go in and try and find out what portion of the contract price, or the cost price, they had to do all sorts of allocation and remove certain portions and add other portions. He was delighted to be able to have this method of reporting the taxable measure. Now we have a new corporation. Bob Sullivan, head of the company, relied on the way it was all agreed beforehand and reports it the same way, always paid tax at the source and reported it that way. Now we have new people coming in and saying, you can't do it that way. And he says, I don't understand, the law hasn't changed. What's changed is there's new principals in the Board of Equalization who interpret it differently. So anyway, that's part of the dispute. And even so, we go back and we look at the law and we find that this is the proper method under the law. I don't think the regulations are unconstitutional because they're vague. What I did beforehand is, in the 90s, before we changed, I phoned the legal department at the Board of Equalization, and I ran it by them. I got opinions from two attorneys there that say this was a proper way to report it. The regulation that talks about the difference between materials and fixtures, and when they talked about shutters being fixtures, he specifically told me, he said the reason that regulation was written is because it was pursuant to a ruling request by a company that fabricated shutters, and he provided that ruling, and the shutters, that ruling applied to shutters that were fabricated and sold. That wasn't our case. I got the stamp of approval from the attorneys in the legal department. I do have their names, and that's the advice that I gave the client, that this is what the Board of Equalization says is proper. So this is how it was reported. Now, second issue, now everything is properly reported according to our position. If the court agrees that the reporting was proper as we show, then there is no further tax due. If perhaps the court says it's not the proper way, then we have to go in and do all the calculations of what part of the cost of the shutter is deemed for purposes of determining taxable measure. Installation is taken out, and then there was all sorts of changes by the agent in his position. But one thing he did do, He says, okay, if you put your shutter on a doorway, regulations say that's a door and a door is a material, we won't tax that. But if the shutter is put where a window is, that's subject to a tax. We have a hard time seeing the distinction. A shutter is a shutter. What we did is the client, he just manufactured the shutters from raw materials, took them out. Every one was a custom shutter affixed to the real estate. The way we read the law, this is a material that's affixed to the real estate. Before it gets affixed, it isn't a shutter. It only becomes a shutter when the component parts are put together on the real estate. And I will have first witness, excuse my voice, sorry. Mr. Sullivan will testify about the process of the manufacturing, and I will have Mr. Cahill, who's been representing the company for well over 15 years, and the prior company, and can testify about the calculations. Thank you very much, Your Honor.
Thank you, Mr. Davis. Does the department wish to make an opening statement?
No, we do not.
All right. For the purposes of giving testimony, we don't have, because our stenographer is occupying what may sometime in the future be the witness's chair, your witnesses will testify from the table. We have one microphone, so what I'm going to do is administer an oath or affirmation to both of these gentlemen, and then you can just put the microphone somewhere between you and your witness so that we can pick up both voices. And if you speak loudly enough, it'll be okay, probably. Okay. And who are you going to call first?
I'm going to call Mr. Sullivan, Neil Sullivan.
All right, let's have both gentlemen please stand and raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give in this matter will be the truth, the whole truth, and nothing but the truth?
Yes.
Thank you. You may sit. And Mr. Davis, you may begin when you're ready.
Thank you. Would you state your name for the record, please?
Neil Sullivan.
And Mr. Sullivan, what is your connection with the appellant?
I'm the company, I'm the owner of the business.
And are you the sole owner?
No.
Okay, what is the name of your company now?
Sully Green Inc.
And was your father an owner of that company as well?
Yes.
And where's your father today?
He's deceased.
Oh, when did he die?
February of 2017.
Are you familiar with the manufacturing process of the shutters?
Yes, I am.
When were you first involved with Sully Green?
Sully Green started in 2008, but I was involved in the previous corporation, the Sullivan Group, and I started in 1995 in October.
Is there any difference between the manufacturing process of Sully Green and Sullivan Shutters?
No, there's not.
Okay. Can you describe the manufacturing process of the shutter?
Yes. So we buy all of our lumber out of state, Wisconsin, and it's trucked in via truckload. It comes in all raw lumber. We've got varying board widths, thicknesses, different stock types, whatever you want to call it. It's all across the board as far as how the lumber comes in. So it's completely raw material. When it arrives in our shop, we stick dry it, and so it acclimates to the desert for usually about 4 or 5 weeks. And then at that point, we bring it into the factory and we start the milling process where we mill louvers, stiles, rails, frames, all the component parts that make up the shutters.
Well, let's start right there. If we could bring your shutter here and explain what the various parts of the shutter are.
So this is a typical shutter. In fact, I made this in our shop yesterday.
And what are the various parts?
These are the louvers here. Okay, so this makes up the operable part of the shutter. And close. This cross section here is called a rail. There's one on the top, one on the bottom. These vertical sections here on the sides are called stiles. And then of course this outside perimeter frame is the actual framework of the shutter that's actually attached to the wall.
Here we've got a latch, so this allows the shutter to be lockable. And then you can see here, open this up, it's got a catch and a strike here, and a pair of hinges that attach the shutter to the frame. So that's basically the anatomy of the shutter there.
Mr. Sullivan, the spell styles for me.
It's S-T-I-L-E-S.
Okay.
Yeah. And that's, styles are used in the construction of doors also. It's the exact same, every door in the world is manufactured with stiles and rails, just like the shutters are.
Now, when you purchase wood, do you purchase all the same kind of wood?
Yes, they're the same species, but different grades.
And why do you have different grades?
It depends on what we're going to use the material for and what's available.
Well, do you use different grades in a shutter?
Yes.
What are those grades?
Select and better, 1A common and 2A common.
What would you use those for?
We try to use the best material we can find, typically for the frames, because that's kind of the part that needs to be, it's kind of the face of the shutter.
Okay. How about for the louvers?
The louvers are finger joined, which I can show you in the panel. We usually will use a lesser expensive stock for that.
So is there any difference in the use of the wood in terms of waste when you cut the wood?
There's more waste with the frames. Yeah.
Would you explain the process then if someone was ordering a shutter?
Yeah. We would send a salesperson out to the house. They would take field measurements, bring those field measurements back to the shop. We have a software that we use that produces cut sheets for all the various parts that I just showed you, the styles, louvers, rails, frames. That goes out into the shop to the different departments. Those departments get the cut sheets and they cut those parts to order, and then they're assembled. Components are assembled together and fabricated like this. And the frames are prepared and everything's painted, and then it's sent out into the field for installation.
When it goes out into the field for installation, is it a completed shutter?
The shutters are complete. The frames are not. Typically, they're not mitered up yet. They're not put together.
I'm sorry, you said not what?
Mitered.
Mitered.
Yeah, M-I-T-E-R-E-D.
So when it arrives at the location of the residence, and you said is any of the piece a completed shutter?
Yes, I mean the panel's been put together in the shop so that it's got time to cure. The frame is put together in the field. So the installer will take the measurements of the window to make sure that he's got an exact fit, and then he'll prepare the frame to fit the specifics of the window and then put the shutter panel.
So it's not a full shutter until it's affixed to the real estate?
Correct.
Mr. Sullivan, pardon me for interrupting, so the rails, stiles, and louvers are assembled, but the frame is not.
The frame is not.
Okay.
Yeah.
Are any of the materials painted?
Everything's painted.
In advance,
They're all painted together.
All right, I'm sorry, Mr. Davis.
So there is one note though that I probably should make. When they're in the shop, they'll paint everything together. So the frames they'll drop the frames in. We call it dropping the frames in around the panels that they're going to go with. So we make sure that we've got enough frame stock to accommodate whatever the window is going to be. So there's a little bit of overage there, and then they're painted all in succession with each other because what we found over the years is the frames and the panels are not painted together. Different groups of paints will be slightly different from each other. So you can have, if you paint all the frames in one run and paint all the panels in the next run, if the paints aren't boxed together, you'll get a slightly different color. So they have to be, the panels and the frames have to be together in the shop in order to do it.
you sometimes put shutters on windows and doors?
Yes, all the time.
Why would a shutter be placed on a door?
They go in front of sliding doors. We mount them on French doors, closet doors, laundry doors. Sometimes they act as doors going into bathrooms or different rooms.
And you're aware how the audit has calculated or determined the tax, how do I say it, whether a shutter door is included for the sales tax?
Yes.
What did they conclude?
From what I understand, the doors are classified strictly as materials only. And the shutters are, let me clarify, if a shutter is installed over a door, it's classified as a material. If a shutter is installed over a window, the frames are material, but the shutter panel, which is the louvers, stiles, and rails, are classified as a fixture. And if we had, if I took this shutter and there was a window here and a door there, and I mounted this onto the door, it would be considered a material. If there's a window next to it, I manufacture the shutter the exact same way that I manufactured this one, that would be considered a fixture. But only the shutter panel, not the frame.
When you say it's considered that way, who considers it that way?
Well, that was the audit.
Pardon?
The audit.
The reason.
Are you aware of how the audit was handled previously in the Sullivan Shutter Company?
Yeah.
How was it handled there?
Before you answer that question, let me ask you something by way of foundation. Are you aware of it because you participated in it, or are you aware of it because of conversations you've had with Mr. Davis? With those two choices, which was it?
I was there. I came on board. I was 26 years old in October of 1995. Our first audit with Wayne Lovett was 1997.
Okay.
So I was there, and I was a part of it because during that time I was in sales. So there was a desk set up in the main office, and Wayne was there with us for probably 2 months. He was kind of a fixture there for quite a while.
If you're testifying from anything other than personal knowledge, having participated, let us know so that we can incorporate that into our analysis of the facts you're testifying to, okay?
Okay.
Great.
I'm not going to go into depth on that because I had Mr. Cahill, who was the one who handled that audit.
Great, thank you.
Thank you for that. I just want to cover one other thing with Mr. Sullivan. Once these shutters are affixed to the real estate, can they be easily removed?
No, they can't.
What would happen if you try to remove a shutter from a residence?
You'd have drywall damage, paint damage, a mess, basically. They would require these two other trades. You need a drywall repair person and a painter to come in and repair whatever was left behind. The shutters they're either nailed into the wall, screwed into the wall via the frame, and they're always cocked in on the outside perimeter and the inside perimeter. We do that on every single window to prevent light leakage. So in order to remove them, even for our guys, if they have to remove something for whatever reason, it's not an easy process. They are installed with the intent that they're not coming out ever.
Are you familiar with the installation of Venetian blinds?
Yes.
Would you explain that, please?
They have a metal rail across the top typically, and they have these little clips, the single screw clips, and then they just clip into the clip, and they can be taken down.
Once a Venetian blind is affixed or installed, can those be removed?
Yes, without any tools or anything.
Can they be removed without any damage to the property?
Yes, they can. Yeah, except the clips. The clips would leave a single hole in where each clip was taken out.
Are you familiar with other shutter companies?
Yes.
Yeah, throughout the state of California. How do most of the other shutter companies operate?
There are very few, at least in Southern California, that actually manufacture their shutters from scratch. There's one in Colton called Avalon Shutters. There's us. I think there's one in San Diego, and there was one recently in LA called Danmere that recently filed for bankruptcy. And what distinguished us from, us, Avalon, Danmere, from everybody else is we actually mold all of our parts. So these louvers that I was showing you earlier, this little profile and these stiles and these rails, these are actually molded in a Weinig molder. So it's a Weinig. It's W-E-I-N-I-G, Weinig. And we have these massive heads that are about 10 inches long. We put these knives in the heads, and the knives that are in the heads duplicate these shapes, just like when you see like base molding and crown molding and things like that. Those are all done in a molder, and that's how they're able to get those shapes. And we have a machine that machines those parts for us. So the reason what's interesting about it is most companies that sell shutters are either buying them from out of the country, they're buying them from out of state, or they're buying those pre-molded parts already molded. So they're buying them from a lumber company or somebody else who's got a molder, like a Weinig molder, and they're molding those parts for that company, and then that company's taking those parts, they're buying units of those parts, they're cutting those parts into the sizes that they need, and then assembling those parts and then selling the shutters. And in that case, in my mind anyway, that's somebody who's fabricating a shutter. For us, we're taking it even a step beyond that, where we're actually doing all that stuff in-house. So we're actually manufacturing it right from scratch, right from the raw lumber.
Did you say that all of the parts of the panel are molded, or just the louvers?
All the parts of the panel, everything. Yeah. Every wood component that goes into our shutters, including the dowels, which we can't see here, but there are dowels that make the joinery of the panel, and we actually make all of our own dowels too.
I have no further questions of this witness.
Department, do you have any questions of the witness?
We do not.
Yes, I'm curious about the relationship between the prior entity and this entity, at least in relation to the 65.
I cannot hear you. Would you please speak in the microphone?
I'm sorry.
Thank you.
Hi, is this better? I am interested in the relationship between the prior entity and the current entity, at least in relation to the argument for reliance on the prior audit. So I understand the prior entity was the Sullivan Group. Is that correct?
Yes.
And what was the ownership of the Sullivan Group?
It was owned by my father, my stepmother. I'm trying to think I think I had some ownership in that company as well.
Do you know what the percentage ownership breakdown came to?
Mine or theirs?
Just for all owners or the primary owners?
Well, mine had to be at least 10% because I was the one that had the license.
It's true, 45, 10.
Yeah.
45, 10.
Yeah.
And as far as the corporation at issue Sully Green Inc., what's the breakdown of the ownership in that corporation?
It's 40%. It's 40, 40, 10. So right now it's in a trust, but I own 40% of the company. My siblings own the rest.
Excuse me, may I interject here? Remember, his father recently passed away, so his interest has now devolved on the family, including Neil Sullivan. But Bob Sullivan was the owner, primary owner of the first corporation and the second corporation. But when he died, the ownership proportions changed.
Okay, I see. So I guess at the time of the audit, I'm just, because I think in the regulation that for reliance on a prior audit, if there was one of the requirements is that the ownership has to be at least 50% the same from the prior corporation to the current corporation. I was just basically trying to get at that. Okay.
Yeah. More than that.
Okay.
Yeah.
Thank you.
Could you be a bit more specific and tell me how it was the same? Give us the percentages and who had them in the old corporation and percentages and who had them in the replacement corporation.
I'll do my best to be accurate. So the Sullivan Group was owned by my father, Bob Sullivan, and his then wife, Patricia Sullivan. And I was a part owner in that company by way of holding the license for the company. The second corporation, they had been divorced at that point in time. My dad owned Robert Sullivan 90%.
70.
So 70%. And the rest of it was divided up among some stockholders. So until February of 2017, he owned 70% of the company.
So he had 45 before,
But he was
according to what Mr. Cahill said earlier.
Community property would have been 90%.
Can I have two people talking at once? Mr. Cahill, you haven't been examined on direct, but you seem to have a handle on this. Let me ask you to state what was the percentages, what were, pardon me? He is sworn in. What were the percentages ownership in the old corporation when these prior audits happened?
The very first audit was 93, 94, 95. He referenced 97 only because that was when it was concluded. At that time, it was Bob, Pat, and then when Neil came in, he received his 10%. So when it started in 91, it would have been Bob and Pat 50-50. Neil comes in and gets 10%. That's at that point in time.
So then when Neil came in, it was 45, 45, 10?
45, 45, 10. Then
And we're interested primarily in when the audit report would have been issued. So that's at the conclusion of the audit.
that would have been 97, 98, and it stayed the same at that time.
Okay.
Then there was a second audit, as we referenced, 2000, 2001, 2002, same ownership structure, a no change audit. That's also referenced in one of the exhibits.
Okay, and then when the new corporation came into existence, what was
Then
this?
Bob was 70%, as he mentioned, the divorce,
Okay,
and all the employees stayed. Neil dropped to 15%, and then it went 5, 5, and 5, with a couple other very trusted department heads.
okay, you said drop to 15, wouldn't that have been an increase to 15?
Well, when I say dropped, I accounted for 15% at that point.
Okay, all right. I don't expect you to give all your testimony now because we may have other questions from Mr. Sullivan. Judge Day, you have questions?
Oh, I
Or
wasn't
did you have
there,
more?
actually.
Oh, I thought you were. Go ahead.
I'm sorry, so I'm just curious, in the 2008, that's when Sully Green Inc. was incorporated?
I think 2008 or 2009. Yeah.
So how did the corporation, the entity transfer from the Sullivan Group over to Sully Green?
Bought it out of bankruptcy court.
Oh, okay. And for the 2003 audit, were you there in the corporation? You were present? So you're familiar with what was discussed during the audit?
17 years ago, but yeah.
Okay,
Fairly familiar.
I'm just, if you could go over, was the application of tax allowing you to purchase tax and cost? That was something that was discussed in the prior audit?
Yeah, from my recollection of that audit, it was a no-change audit, and it was signed off by Kathleen Shackelford as being a no-change audit.
Okay, and as far as accounting, with the methods of, like, I guess the books and records, the process, was that the same from the two corporations? Okay.
Nothing's changed.
Okay, thank you.
Judge Day?
Mr. Davis, in your opening you mentioned that you asked Board of Equalization attorneys about tax treatment.
I can't hear you. I know it's me and my hearing, but I appreciate it if you can.
My apologies. I'll do that. I'll try that again.
Thank you.
Mr. Davis, you mentioned asking Board of Equalization attorneys about tax treatment and consistency.
Yes.
Did you ever get anything in writing on that?
Did I get what?
Anything in writing?
I did not.
Okay.
Now, excuse me, I got nothing in writing from the attorneys at the legal department, but what we did was confirmed upon audits.
Fair enough. Thank you. Mr. Sullivan, compliments on the craftsmanship. Just to clarify, Sullivan Shutters and Sullivan Group, are they the same company? Because both of those names were mentioned, so I just wanted to clarify that.
Yeah, the Sullivan Group was the original company that started back in 1992.
Okay. And in 2008, when Sully Green purchased the assets of Sullivan Group, in terms of the accounting function, did they also rehire the entire accounting department such that all of the employees were exactly the same?
With one exception, Patricia Sullivan, who was then my dad's ex-wife, was the only person that we did not hire. But the other office staff that were present were hired, and the accounting didn't change one bit.
Okay, thank you. And then, sorry, one last question. With regards to installation, now, in a perfect world, all windows are, and I guess window frames are perfectly rectangular. If there are irregularities to that, how would an installer go about kind of modifying what you had built in the warehouse on site?
That's a good question. I mean, if there are scenarios where they're installing something where, like if we use this as an example, you've got a wall that's furred out, and then maybe there's another wall here that's furred out, and then the window is actually sitting in between those two bump outs. So obviously, if you were going to put a level on it, you'd probably find that this wall is out a little bit somewhere. Maybe this wall over here is out a little bit somewhere. So in those type of cases, using that as an analogy, the installer is going to have to figure out where the smallest point is, and then he's going to have to conduct the installation based off that measurement. So it will put him in a position where he's got to trim the frame. He may have to even go in and trim the panel itself. There are scenarios where it's going flush up to the ceiling, or maybe the ceiling's not level, or he's got to trim the bottom of the panels in order to keep the gap on the bottom consistent. So there's quite a bit to it.
Backsplash was granted.
What's that?
Backsplash was granted.
Yeah, backsplash. Yeah, and they've got, they have things that they have to notch around if they've got a kitchen window with backsplash around it, so on and so forth. So there's a. It's not something like an untrained person can go out and learn right away. It usually takes somebody about 3-4 years or so before they really come to terms with all the different challenges that you have in the field. And they definitely have to, do things in the field in order to support the installation of the shutter.
Thank you, nothing further.
Department?
No questions.
I'd like you to go into maybe a little bit more detail about how the operation works in general. You told us about the lumber and how you make everything basically from scratch with raw lumber. Is every piece that's in production for a specific installation? In other words, you get an order, then you make the shutters for that installation. You do not keep a stock of goods because windows are different sizes. Is that fair?
Yes, yeah, that's accurate.
All right. Let's talk a little bit more about the measuring process and how you make sure that the product that is produced for that specific window or doorway will fit. Is the term reveal, is that the space around the edges?
Yeah.
You buy doors these days, pre-hung, many of them are pre-hung, most of them are pre-hung, and the whole unit goes into the wall. There's a lot more give when you're, a lot more room for error, but you've got to have the door has to swing perfectly with the right, you want even reveal around the three edges that aren't around all four sides of the door. So it closes properly. Is that anything at all like what you have to do?
That's exactly what we do. Yeah.
So you don't produce pre-hung shutters where the frames are brought in, the wall sheetrock is torn out, you don't install them directly, but you do the same thing with framing it on site?
Yeah, there's a little trick to it. And what the installers will do is they'll mount the piece that has a hinge on it first. So this this section here, it's got the miter here, and this where a frame pour would have a miter on the bottom. So the trick to it is they'll come in and they will level that first section out, so that piece of the frame that actually has the hinge attached to it. And by doing that, they're able to get, regardless of what the reveals are and everything else, their objective there is to make sure that it's square and plumb and in plane. So they will set that hinge piece, the butt hinged side of the frame, level and plane, and then build the rest of the frame off it. Much like the doors that you're describing, you know, they have the jambs of the door, and if you look at the framed building and you look at the pre-hung door, there's a big gap there, and that's why you have casing that goes around doors. Just like this door that's behind the officer, it's got metal casing around it. Now, if I tore that casing off, there'd be a big gap there between the drywall and the building itself. And that casing is designed to make up for whatever inequities there are, so that that door will open and close properly. It may not be 100% square, but it will have an equal reveal on all sides, and it will open and close the way it's supposed to. The shutters are installed basically using that same principle.
I have an old home, and all the windows have trim on them. Is it most common for you to install your shutters in window spaces that are already trimmed?
We do that, yeah. Those are the kind of houses I don't like to install in.
Okay, so some of the ones you install, the window trim hasn't been installed yet?
Sometimes. In those cases, like if you have let's say you've got an older home that's got traditional trim around the windows, in those cases we would actually come in, if we can, and if there's an existing window jamb that's a wood jamb, like a 6-inch wood jamb or even a 4-inch wood jamb, we'll come in and go mortise your jamb that's part of the house and then attach the shutter right to it without putting the frame on it. The frame is there in most cases where we don't have that option available, but in those type of installations where you're dealing with an older home that's got traditional sash style windows, where you've got a wood jamb that's part of the building, we'll actually fix the shutter right to your jamb. We'll mortise the jamb out and put the hinges in there, and then we'll put a little stop frame around the back of it that you can't see from the front, and then that'll be your installation.
Typically, you would, on an older installation like that, you would not remove the trim. You would not need to remove the trim.
Would not, no. So it becomes, you know, in those type of installations, there usually when we do those type of installations, we will actually not finish the shutters until after they've been installed. So we'll bring them out raw wood. They'll trim the stiles and the rails and whatever they have to trim to get it to fit properly into that type of an opening. They'll leave half of the hinge there in the house, bring the panel back to the shop, finish it, and then bring it out and put the pins in, and it's done.
Tell me about the shutters that function as doors. Give me examples of where your company has done those types of installations.
We made, like for French doors, we have a shutter that looks identical to this one that would mount right onto the door proper. So if you think of a French door where it's all glass, and then you've got the stiles and then the rails, which are, you know, usually on French doors they're about 6 inches wide. That frame is mounted right onto those stiles and rails. And in those cases where you've got like a French style handle, a lever style handle, we actually make a cutout in the shutter panel to accommodate that handle. So when the shutter is attached to the door proper, the shutter becomes inseparable to the door. In other words, that shutter is mounted onto the door, it becomes part of the door. The door will open and close and the shutter will stay there. If you need to clean the glass, the shutter, because it's hinged, can open independently of the door in order to get at the glass, or if you have to replace the glass, the shutter will open independently of the door. But otherwise, when you close it, the magnetic hinges, the magnetic catches are designed to keep that panel fastened right to the frame that's fastened to the door.
What's the function of a wood shutter?
The function of the wood shutter? Well, I mean, in a lot of ways, I think people consider it to be security. When they're closed, it's very difficult if you're going to try to get into a house and they've got shutters on the windows. It puts a barrier in front of those windows. It's not impossible to get through. but it's a lot easier to break a piece of glass on a French door than it would be to break a window or a door that's got a shutter attached to it. Because when they're closed, these louvers are a 1/2 inch thick. So from the back, it's pretty solid. It's not going to go anywhere.
What other functions do wood shutters have?
They insulate. They have an R3 insulation value, which is significant, yeah. And they also, you know, obviously with the louvers, they're also able to control the view and control the light.
So, just a quick question. You were saying that it provides security. Is there a lock on the shutter then?
We do have, yeah, this has got a hasp lock on it. This is something that we offer to our customers. Not everybody chooses to have it, but this is like a little locking mechanism. So if you're going to try to open this from the outside, you couldn't do it very easily. You could break this off if you were really applying a point load to it, but it's not easy.
I knew exactly where the latch was.
Yeah.
Okay, I have no other questions. Judges, any other questions? Department?
We do not.
Mr. Davis, any follow-up for this witness?
No, Your Honor.
All right, thank you. Thank you. Would you like to have your next witness testify?
Yes, Your Honor.
Go right ahead.
Kevin Cahill. Would you state your name for the record?
Kevin Cahill.
What is your occupation?
Certified public accountant.
And in the course of being a certified covered accountant, did you ever represent the company owned by Bob Sullivan?
On numerous occasions.
What company was that?
Sullivan Group initially.
Did that include Sullivan Shutters?
Yes.
And did you also represent any other subsequent companies owned by Bob Sullivan?
The first audit, I represented him. The second audit, I represented him. The most current audit, the one under hearing today, I represented him. And then there's a fourth that we're waiting for the outcome of this hearing that I'll be representing him on.
And were you involved in the preparation of the sales tax returns?
Yes, I was.
And when were you first involved in preparing tax returns, sales tax returns?
I got involved in the first audit in 1997, 98, when Wayne Lovett finished his audit. I was asked to get involved with you, legal counsel, as to his positions and his results.
And who was Wayne Lovett?
Wayne Lovett was the auditor at that time for the Board of Equalization.
And what was the result of that audit?
The best term to use was it was a no change. What had happened is the complications associated with the way that Bob started this business. He was required to sell to contractors because he didn't have the personnel or staff to do his own installations. He also sold to interior decorators so that he could get his name and the image of the business out into the public. And then there were some sales to the consumer, so it was a threefold type of a sales process at that time.
And did that affect the calculation of the taxable measure?
It complicated it, yes it did. So what had happened is when the audit concluded, Wayne Lovett, we have correspondence, agreed with his supervisor at the time that there has to be a better way to calculate what the taxable measure should be.
Before you get to that, wasn't the taxable measure calculated when Sullivan was selling to other contractors? He did sell to other contractors.
Yes, he did.
At one time.
Yes.
And isn't it correct that the way to calculate the taxable measure was the price that was charged to the contractor?
For that part of the sales process, yes, that was one piece. Yes.
And if you're not selling to contractors, then a different calculation is used, is that correct?
Yes.
So, was there a change in the way Sullivan's calculated the taxable measure for shutters in sometime in 1999?
Admittedly. What had happened is, after doing various studies, when I got involved, together with Wayne Lovett as supervisor, we were able to demonstrate that paying at the source generated as much or more sales tax than the method that they applied.
Excuse me a second. Ellen, I know these judges are familiar with that, but for the record, would you please explain paying at the source?
Lumber from out of state, use tax, pay tax on it. Paint, pay tax on it. Hinges, pay tax on it. Sandpaper, pay tax. Everything necessary to produce the shutter has a tax associated with it when they purchase it. Paid at the source.
Was that done by one of the Sullivan corporations?
Yes, but what had happened is, in their study, they agreed when they looked at paying at the source that it generated a proper amount of sales tax, and effective April 1st, 1999, it's Exhibit 1, that the Board of Equalization was put on notice via correspondence that we will now be paying at the source, and as a matter of fact, they requested a refund. 2 months later, they got their refund.
You say they requested
The company, because there was a overpayment of sales tax.
And was there an audit of the company when tax was being paid at the source?
Yes, that 2000, 2001, 2002, the audit was conducted by Kathleen Shackelford, who happened to be involved in this most recent audit, and it was also supervised by Jess Salazar. Carl Hirth was the supervising manager, I believe is the position that they used, and the results of the audit are also shown as an exhibit of a no change, and there is reference that paying at the source is the proper taxable measure. It is in the audit.
Are you referring to Exhibit 2?
Yes.
And that was a no change?
No change.
If I may read from it, the second page of Exhibit 2, the auditor recommends no change in taxable measure and has closed out the permit effective June 30, 03, since taxpayer is obligated to pay tax on purchases. A consumer's use tax application has been obtained from the corporation. And again, the record. And you mentioned approval by Carl Hirth, and I mentioned to the court Exhibit number 3, which Carl Hirth, he's now retired, was the district principal auditor who completely reviewed the examination report and approved it, and that would be Exhibit number 3. When the audit that we're talking about that was approved, paying the tax at the source, could you explain how that was done? What was reported on the sales tax return?
As I stated, wood, so they examined all the material invoices, paint, because the wood is out of state, paint, hinges, as I stated, all the components necessary. They pulled all the invoices to ensure that sales tax was paid.
And that was verified, is that?
Verified in the audit.
at some point in time, there was another audit for the years 2009 to 2011. Were you involved in that audit?
Yes, I got involved September 12th, 2012. What had happened is Bob was aware that he was in an audit.
Bob who?
Bob Sully. And he said, Kevin, we don't have any issues. You don't need to get involved. I'm not the cheapest guy in the world. So he said, we will go ahead and handle this. Bob then, at the conclusion of the audit, work papers were submitted June of 12. After doing 9, 10, and 11, the results shocked Bob. He couldn't even understand why the board changed their positions. I was then contacted. By the time he got the notice of determination, together with the supporting work papers, that's when I was called. Like, hey, you need to get involved now.
What were your primary concerns to the approach of the DOE auditor in the work papers dated June 28, 2012?
Well, there were several changes that the auditor made. Initially, their understanding of the business was inadequate. What Bob had done was, in talking to Mr. Pruitt, he was the auditor, I don't want to use the words bait, but basically, because I deal with a lot of audit agencies, Mr. Pruitt was asking the questions that he was interested in getting answers to. So Bob said there's pretty much 4 components, 4 costs that go into developing his sales price. So you have the cost of wood, obviously, cost of labor, installation cost, and then the last is profit. So he put together generically just round numbers based upon his understanding of the manufacturing process, not knowing at the time that Mr. Pruitt was going to dissect those numbers and not look at invoices as it pertains to the payment of sales tax. There was no indication to Bob that an approach was going to be changed as it pertains to how the board at that time was going to calculate taxable measure.
Mr. Cahill, let me ask you something. You said you weren't there during the audit itself. You got involved after issuance of the report. Is that right?
The first one.
Okay. I'm talking about the 09 to 11 one.
Well, 09 to 11, there were several changes to it. But yes, I was involved in that. My point is, Mr. Pruitt changed his work papers and changed his approach numerous times.
Okay, and you know this because you were actually involved in that process?
Yes, the first notice of determination, when I looked at it, I was appalled. So I went in and started looking at the pieces. The board uses this approach pretty much in different areas, whether or not they're dealing with liquor consumption, whether or not they're dealing with the wood retail sales. I'm familiar with the work paper approach that the board uses. It's a building block approach. In looking at the building block that Mr. Pruitt started with, numerous errors, he didn't think it through. So when I saw that, we said we need to readdress these calculations. These calculations are not correct. So a good example, the 4 pieces that Bob indicated, wood, labor, install, and profit. Bob would hope to have profit, but you can see in our exhibits, he didn't have profit during this 3-year time period. That's pretty much, the economy at the time. So he was covering costs. So that, you got to carve that piece out. Then what was left was installation costs, of which there was an understanding. Bob agreed with Mr. Pruitt, $4.25 represents installation costs, not installation labor, costs. Then what's left is your $17 to figure out what piece is wood, what piece is labor, and then you have other components such as utilities, car leases, and then just right on down the line, what shows up in any business.
When you mentioned $4.25, isn't that $4.25 per square foot?
Per square foot.
To determine an allocation.
To determine of the $21.25. So we agreed on that. Okay, well, let's carve that out. We don't have a problem with that. The problem we had is what Mr. Pruitt was coming up as taxable, tax exempt, the easiest way to explain material versus fixture. Mr. Pruitt was trying to take the position that because you can remove by hinges this shutter panel, that truly the only material is the frame. Now, that is what was just argued, 20 minutes ago. That's his argument. We disagree. Now, in disagreeing, because we have to take a look at the calculations that we're forced with, we disagreed with the components. So his first June 12 audit addressed wood, but didn't split it out between frame and shutter. He said, how can you do that? He looked at labor. He didn't split it out between frame and shutter. I said, if you're going to go down this path, you need to be more defined in your calculations. Everybody agreed at that point in time, cannot rely on that audit. And the board could.
Let me ask you, just to clarify, we never get to the necessity to do calculations if taxes paid at the source and they're deemed materials. Is that correct?
That's true. There's no reason for it because we don't job cost.
That's a yes?
That's a yes.
So because that wasn't accepted, it was necessary to do calculations. Would you please explain for the record what calculations are necessary if they're considered some of our fixtures?
You need to break out the wood, the paint, the other materials that go into two components. To the extent that it is deemed there's two components. You have the frame and then the shutter panel. In going through those calculations, this stopped, I believe it was 2012, and then Bob had a lung transplant, couldn't get involved with it. This went on hold for 4 years. In 2016, it picked back up when Bob was able to come back to the business, and it was agreed that Mr. Pruitt would physically show back up at the facility, at the manufacturing process, and we would meet and discuss these pieces. Now, simply, if you were to look just at that, take a picture, you would say there's more shutter, wouldn't you? Wrong. The wood that is in the frame, that's the part that Mr. Pruitt couldn't understand. The process of building a frame requires more pieces of wood because of the gluing, the lamination. And it's through that process that we were able to convince him what you're looking at is 36% is frame, 64% is shutter. That might visually to somebody appear to be the case, but it's not the case in the actual application of the wood. So he came over, we went through a study, he said, okay, I will go ahead and revisit this. Let's select, and we did, we decided in 16 to select certain jobs even though the audit was 9, 10, and 11, because the process did not change. Now, in that sample, the issue is we use the term cherry-picked, but very simply, the board used 6 jobs. Of those, the jobs that I looked at, the 6 I looked at, only 3 of the 6 that I looked at were actually used by the board. They didn't use mine. My determination of the wood was based on a study of looking at different pieces. That generally, that size would be something that would go over a shower window, okay, as an example. So we studied the shower. we studied a master bedroom, and then we studied 3 jobs. Because somebody's house could include windows and a slider. In that study, it was closer to 50-50. Okay, 50% wood in the frame, 50% wood in the shutter panel. Mr. Pruitt wouldn't accept it, but that's what we determined. Now, the issue at hand is the waste. He was looking at certain jobs as to board footage when the job was finished, but the wood that goes into the frame, there's a lot of waste. Okay, so that was one thing that we couldn't convince Mr. Pruitt of. There was one other very important issue. Neil touched on it, but didn't have a chance to really get into detail. When he mentioned 1A, 2A, and base, the cheapest wood at that time was 57 cents a square foot. The most expensive at that point in time was 91 cents. I got an excellent memory. Mr. Pruitt said, well, you've already admitted then that you can use the cheaper wood for the frames. Well, here's the problem. Bob, being in a cash flow standpoint, not in a perfect world of able to say, in the next 2 or 3 months, I've got 10,000 square feet I'm going to install, 10,000 here. So what I'm going to do is I'm going to buy wood based upon the different pieces where you would normally do to save money. He had to take what he could get because he was living off of credit cards. So in any one case, some of the most expensive wood could have been used on the frame. So, and then you have issues with knots and so on. Mr. Pruitt would not even go down this road. So his analysis basically took the understanding that if the frame is the cheapest, we're going to apply the cheapest rate to the frame. If this is the most expensive, the styles on it, because that's where it has to be truly the most proper from straightness, we're going to apply that price there. We couldn't agree on what the price should be. We had an average cost, and we did an analysis much higher than his average cost. So every time we looked at a piece, whether or not it was wood, whether or not it was labor, we could not agree. So I finally just said to Mr. Pruitt, because we both agree what sales are. You've got a sales tax return, you got federal income tax returns, I do compile financial statements for this client. Nobody disagrees on total revenue. So I asked Mr. Pruitt, did you extrapolate, using your numbers, did you tie out when you got finished what labor would be using your cost per hour? No, I didn't. Did you tie out material costs as to what they would be? No, I didn't. I did. His numbers make no sense. So it was at that point that we went one step further and he said, okay, you got to give me a labor analysis. That takes us to the first week in September, January and September. So Jolene, who worked there at the time, one of the accountants, said, here's the people that work for the company. I'm not going to say inadvertently, but she listed 2 people that do nothing but install because, as Neil mentioned, you got to be experts at this. But they are not the only installers. So what had happened is, this takes us to January 30th. We had no idea what Mr. Pruitt was going to do. On January 30th, the $4.25 that was agreed to as installation cost, removed. He gave us 73 cents. And then he called it installation labor. I said, well, what about the cost? What about the trucks? What about the vehicle? That's when Bob was done. He said, Kevin, I'm finished. I can't. And then he died a couple weeks later. But that's where it takes us. Those are the results where we are now.
So just to tie this together, this significance of this allocation is because some portions are taxable and some are non-taxable, is that correct?
According to the position that the board wants to take.
Right.
We disagree with that.
In other words, if they don't accept our premise that they're materials, then we have to go into the allocation of the items.
Right.
Now, for example, wood and construction material, are those taxable items?
Depending on if it goes, according to the board, if it goes on the frame, no. If it goes on the shutter panel, Yes. The board took the position that the company was the consumer as it pertains to the frame portion, the sales tax portion, because you gotta have a consumer somewhere. But that's the position that the board took.
How about paint, hinges, sanding, and construction labor?
Same, it's applicable to both components.
Are they taxable items? Are they included in the taxable calculation?
Should they be? No. Are they now in their calculations?
Let me
Yes.
rephrase it. Is this what Mr. Pruitt proposed?
Yes.
Taxable. And what items did he allow as non-taxable items?
The only non-taxable item was 73 cents a foot for installation, which previously agreed to $4.25. And then the pieces associated with the frame, according to their work papers.
And how about trim?
Trim, I'm thinking frame and shutters when you said trim. Okay, trim and frame. Here was the issue, and it's in an exhibit. He starts out by saying wooden construction material. Then he goes and mentions paint, hinges, and labor. Then he mentions trim and framing. Then he mentions installation costs. That was in the first audit. That's where we couldn't agree, because the only item that truly you can carve out is installation costs. The other pieces need to be split. His thinking of trim and frame is that outside piece. That's his thinking. But that is not what was taking place. So the numbers that he used to build up to $21.25, because you have to build up to what the sales price is, the allocations were wrong. In the original June of 12 work papers, they were wrong.
How difficult is it then, using this allocation between taxable and non-taxable items, to prepare a sales tax return?
Extremely. Because as I mentioned, they sampled 6 jobs, we sampled 6. They go anywhere from a low of 38–39% frame to a high of 61–62% frame, depending upon the job. So to job cost every job to try to determine these calculations is too much work.
And how did Mr. Pruitt treat shutters that were installed over doors?
Excluded them as non-taxable taxes and basically not subject to sales tax.
And was it because he construed them as doors?
He did, yes.
And as a door, there were like regulations say a door is a material?
Material.
Do you have other disagreements with the Mr. Pruitt's calculations?
Wood was one, the second was labor. On average, he was at $8.35, I'm using my memory, no, $8.36. We were at $7.57. We tied out to the financial statements, he did not. The other area had to do with, they refer to it as tax paid credit. When,
would you explain that?
Okay. They paid sales tax at the source, obviously. We sat down at the conclusion when the January 17 work papers came out, and then Bob dies. This goes to April, goes to May, goes to June. It kind of got pushed back a little bit because of Bob's death. But the positions taken by the board continued to change. So we sat down and had a meeting. Lisa Nickerson, she's Carl Hurst's replacement, and sat down with Mr. Pruitt and with another representative. And they then agreed at that point, they said, well, I tell you what, if you disagree with 36%, 64%, how about if we give you a 50-50? And we looked at it and said, if this is the only position, we still want to argue this in law, but if this is because they didn't have the ability to make that decision. They had to stand with what they had already audited. That's the reason we're here. But from the standpoint of the approach, if you want to agree to 50-50, we will rework the numbers. So they came into a meeting with green paper, blue paper, yellow paper, with different numbers. And I looked at these numbers, and what had happened is the tax did not change. The reason the tax didn't change is as they gave us a larger percentage of what we deemed to be non-taxable, the frame, they took away the tax we paid. I said, what? I said, how can you do that? So it didn't matter if the frame was 40% and the shutter was 60. Of all the tax we already paid, they take away 40. Okay, so there you are. If they changed it to 50-50 of all the tax we already paid, they took away 50%. I said, wait, this isn't going anywhere. That's when we reached a stalemate, and then contacted the Taxpayers Advocate Office.
And what did they tell you at the Taxpayers Advocate Office?
Mr. Wang reviewed the work papers and disagreed with the positions by Mr. Pruitt and at that time CDTFA. He disagreed. As it pertains to the tax paid credit.
And he gave you a written note to that memorandum?
Yes.
That's Exhibit 11?
Yes. Mr. Go ahead.
And Exhibit 12 was a follow-up.
Yes.
Okay, go ahead.
Mr. Wang, and let me back up just 1 second. I had a conversation with Mr. Lovett years and years and years ago. He left the board, but I was able to hunt him down. And I told him the current position that they were taking, because his argument was, are we calculating the proper amount of tax? He never thought for 1 second this would be 2 pieces. He said, are you kidding me, Kevin? They're treating this as 2 pieces? Where did they come up with that? And that's a statement that Mr. Levitt made. So obviously there's a disagreement as it pertains to employees conducting the audit and the interpretation of the law. I mean, there's obviously a disagreement. So as we went a little bit further with this, I wanted to make sure that somebody independent, that's Mr. Wang, would at least look at it. Are we going down the right road if it comes to a calculation issue? He takes the position that tax paid credits should never be calculated using costs. They should always be calculated using gross profit. And he explicitly states that. The issue that we have, and it's pretty simple. Mr. Wang's first email was of a generic nature. To the extent that you have wholesale costs, you need to determine a gross profit on that. We sent these emails, I think, different representatives of the board, and they said, well, develop a wholesale cost. I got a hold of Mr. Wang, I said, we don't have a wholesale cost. To the extent that Neil would be fortunate enough to land a developer that, let's say, builds 50 homes, and they're cookie cutter, there's 5 different models, and they were to say to Neil, here's what I want for the 5 models. Would Neil give them a wholesale price and let them do the install in connection with building the home? Of course he would, but that's not the nature of the business. So I explained this to Mr. Wang, that we don't have any wholesale, but the board was hanging on that and would not accept his memo and his positions as it pertains to this gross profit. So the true calculation of gross profit is sales less cost, since we have no profit, and we can demonstrate that what's left over is labor, basically. Using that approach, we come up with a tax that's owed, and I mentioned this to Neil, to the extent that we lose on this. The tax we came up with is around 39 grand. It's in one of the exhibits, but it's not the 71,000. Based upon this understanding of how taxes already paid should be utilized in this calculation. No, that's right.
I don't have further questions.
well, no, excuse me, one more item. One thing Neil didn't have a chance to do, and we did this with Mr. Pruitt. If you have 1,288,000 in shutter sales, we all agree the shutter piece that's not subject to sales taxes, you can carve out the doors. If you were to divide that by $21.25, because you, the consumer, that's what you're gonna pay, you're not, it's not what we're paying for the wood one now, that's what you're gonna pay. You come up with approximately 64,000, 63,000 square feet of wood. If you multiply that by 73 cents, the position that the board is taking, that $1.3 million of sales costs you $43,000, $44,000 to install, it's ludicrous, makes no sense. But they wouldn't accept that because, again, and I want to reiterate this, the board changed its position from installation costs, plural, to installation labor. They changed their position. That's it.
You through? You, Mr. Davis, are you done with this witness?
Yes, Your Honor.
All right. Department, any questions?
We do not have any questions.
Fellow judges, questions?
Not for the witness, I will have one for CDTFA.
All right, for the witness? All right, go right ahead.
After all that prep, I don't get questioned.
Did CDTFA have an opportunity to do their opening presentation yet?
They haven't finished witnesses yet.
Right, so I'll wait until after their.
You want their their argument first?
Yes, because that,
okay.
Yeah.
All right, well, we're ready for the evidentiary phase is concluded. Does anybody need a few minutes to get a drink of water, use the restroom? Is 5 minutes okay? Take a 5-minute recess? Let's do that. Let's come back in about 3. That's about 5 minutes.
Presentation, normally I do the presentations first, both parties do the presentation, and then I have the witness testimony, and then I do closing presentation. That's why I was asking.
No evidence before argument in my case. It's,
I just want to make sure.
What?
Oh, you mean that way?
Is that, can I get back through that door?
Yeah.
no, you'll have to come through that door.
Wait, how'd you do that with your phone? Oh.
Seriously? I thought they were like a half hour away. So which way do you go south? To oh, yikes. Could be. Well, no, I tried to leave till 6:40.
But
and I believe what we talked about were 15-minute closings and a 10-minute rebuttal. Isn't that what you requested, Mr. Davis?
Yes, but hopefully it won't be that long.
Okay, that's fine. If you're ready to give your opening argument. Oh, before you do?
Yes.
Judge Quee, you have a question that you want to wait until the department's done with their argument?
Oh, I was going to ask them to clarify an argument, but I'll wait for them to see if they answer my question.
All right, great. So, Mr. Davis, if you're prepared to give your first closing, you may begin.
When you say my first opening, you mean the closing?
First closing, yeah, your first closing argument. You'll have a rebuttal after that, but you can give your main closing now.
Thank you. Thank you. Our position has been very consistent. We think the way the taxable measure was calculated back in the 90s and it was accepted by the board as a matter of law, it should be the same way that it's been reported. In other words, the shutters, well, let me just say the appellant taxpayer is a construction contractor. It takes raw materials, puts them together, affixes them to the real estate. It becomes, by definition, it's a material. The item is not a standalone type of feature or a personal property until they're all put together. And that's one of the reasons, the main reason, I would say, that we have a construction contractor adding something to the real estate. And they reported it as a material properly, nothing wrong. With the agreement of the Board of Equalization at the time, they reported as tax-paid sales and filed returns that way, consistently throughout, never deviated until they were audited, and Bob Sullivan was just thrown for a loop when he found out it was not accepted. But even as a matter of law, when you go back and read the regulations, and I don't mean to say the regulations are wrong or misinterpreted, but what I'm suggesting is in the regulations it talks about doors are materials. Okay, we accept that. I don't understand the rationale for it, because you can put a door on and you can remove it. It seems to me it's a fixture. But nonetheless, we're not arguing with that. The agent or the auditor, when he came to it, it was like he put blinders on and says, okay, doors are materials. So if you take your shutter and you put it over a door, it's not taxable. But if you take your shutter and you put it over a window, it's a taxable item. I don't see the distinction, and I don't blame Mr. Pruitt. I mean, he's there to look at the law, but I think we have to look a little further into it. And when I inquired about the reason why shutters were classified that way, I was told by the legal department that that was done as a result of a ruling of a company in the shutter business that wanted a ruling who fabricated shutters. They never considered a company that manufactured from raw materials. So we did it what we thought was according to law, and we had the blessings of the Board of Equalization, and it was reported that way. So now we come into the later years, new corporation, we report it that way, and they object to it. So is that right? I submit to you that it's in accordance with the law the way they did it. These shutters are not by nature a fixture if a fixture is determined as a standalone feature that is an item that stands by itself and then is affixed to real estate. These shutters are not standalone until they are put together and affixed to the real estate. So that's our argument. Now, if that argument doesn't stand, if it stands, then we don't have to go any further. If our argument is wrong, what the auditor wants us to do is do an allocation of items that go into the door of the shutters to determine the taxable measure. And I submitted exhibit number 19, which shows the auditor's allocation of items as which ones are taxable, which ones are not taxable. We don't agree with the calculations and the way he's allocated them. But this is one horrendous job of doing a sales tax return, of having to go into every sale to determine which items that go into the door, how much was the paint, how much were the hinges, how much was the sanding, how much is the construction labor, how much was the wood, how much wood is being allocated to this shutter, all used in a shutter to determine the taxable measure. I can't believe that what was adopted by the legislature or by the Board of Equalization when they did when the regulations were adopted. Even so, we're saying the calculations by the sales tax auditor were just improper. They're skewed in favor of the taxable amount without proper justification. As Mr. Cahill demonstrated, the amount in the taxable amount, $725 for the wooden construction and $4 for the shutter fixture manufacturing labor. $4. That's $11.25 of the $18.25 for the shutter. The taxable amount being $11.25, and the non-taxable amount being $6, $7, about $7. It's just not right. We have demonstrated that. We just submit to the court, Your Honor, that we're asking the court to look at this as a tax paid. All taxes have been paid, prepaid. All of the items, these are materials. That is the proper way to calculate the sales tax on the manufacture and installation of shutters, which we believe are defined as materials. Thank you very much.
Thank you. Technically, we're not a court either, Mr.
I know, you're a
tribunal of some kind. Yes.
Thank you.
Department, are you ready to give your only closing argument?
We are.
All right, proceed.
In this appeal, there is no dispute that Appellant is a construction contractor that furnished and installed plantation-style shutters in California under lump sum construction contracts. In addition, there is no dispute that Appellant either purchased all of its raw construction materials tax paid at the source of purchase, or Appellant paid use tax on its sales and use tax returns, measured by the cost of the raw materials. Under Regulation 1521, Subdivision B2, construction contractors are generally either consumers of materials or retailers of fixtures they furnish and install in the performance of construction contracts. Regulation 1521 defines materials as construction materials and components and other tangible personal property incorporated into, attached to, or affixed to real property which loses its identity to become an integral and inseparable part of the real property. Regulation 1521 defines fixtures as items which are accessory to a building or other structure and do not lose their identity as accessories when installed. Appendix A to Regulation 1521 lists typical items that are classified as materials and includes materials such as windows, doors, millwork, and other items that become an integral and inseparable part of the real property. Appendix B to Regulation 1521 lists typical items that are classified as fixtures and includes items such as Venetian blinds, awnings, alarms, and other items that do not lose their identity when installed. According to sales and use tax annotations 190.1790 and 190.0829, interior shutters, including plantation-style shutters, are fixtures, and construction contractors are the retailers of the shutters they furnish and install as part of a construction contract, and the retailer owes sales tax on those retail sales. Here, Appellant furnished and installed plantation-style shutters as part of construction contracts. Plantation-style shutters are an accessory to a building. They do not lose their identity as accessories when they are installed. Moreover, shutters do not become an integral or inseparable part of the real property. Therefore, the shutters are fixtures, and Appellant owes sales tax on those retail sales pursuant to Regulation 1521, Subdivision B. However, we note that Appellant is entitled to a credit for the tax it paid on the raw materials that were incorporated into the shutter panels. In objecting to the department's determination that their shutters are fixtures, appellant attempts to create a new way to distinguish between materials and fixtures. Appellant proposes that a manufacturer or a person that builds from raw materials should always be treated as consumers of raw materials they consume to construct an item like their plantation shutters. Appellant attempts to distinguish between manufacturers and fabricators, which are people who that purchase pre-made supplies and either assemble them or just purchase a pre-made shutter panel. This is not a relevant distinction to determine whether something is a fixture or material under Regulation 1521. Under Regulation 1521, a fixture is property which does not lose its identity upon installation in realty or real property. The condition in which it is acquired by the contractor is irrelevant to its identity as a fixture and is only a factor in determining the sale price of the fixture. In fact, Regulation 1521, subdivision B to capital B, specifically describes how the price is determined when the contractor is the manufacturer of the fixture, which is done by aggregating several items including the cost of materials to the contractor. While appellant cites to various annotations involving fixtures that were purchased by the contractor prefabricated, those annotations do not state or stand for the proposition that a contractor could not be the manufacturer of a fixture, as such would be directly contrary to the plain language of Regulation 1521. Based on the foregoing, appellant's shutters are appropriately classified as fixtures, and appellant owes sales tax on its retail sales of the shutter panels. Moving on to the audit methodology, the department determined that the percentage of appellant's shutter sales by using, or they determined the percentage of appellant shutter sales by using a segregation test for the third quarter of 2009. I will mention now that the department excluded doors from the calculation. So essentially, they're segregating the sales of doors from the sales of the plantation style shutters.
By sales of doors, you mean shutters installed on doors?
I do not.
Okay.
By doors, I mean actual doors.
Okay.
Shutters used in place of doors.
Okay.
That is another distinction that we'd like to clarify. Shutters installed on doors are fixtures.
Or in front of doors.
Or in front of doors. Shutters installed in place of a door would be considered a material as they would be acting as a door, which is specifically classified as material in Appendix A of Regulation 1521.
And that is how the audit did it?
Correct.
Go ahead, proceed.
The department determined that 74.73% of appellant's sales were for shutters. Accordingly, the department calculated total sales of shutters for the liability period of just under $2.5 million. The department then used appellant's cost sheets to determine the proration between the taxable sale of shutter panels and the non-taxable sale of shutter frames. The department initially determined that 61.64% of appellant's total shutter costs were taxable or attributable to the shutter panel, and 38.26% was non-taxable or attributable to the framing. Upon re-audit, the department reviewed additional information provided by appellant and recalculated the proration of costs, and found that 58.04% of appellant's costs were taxable and 41.96% were non-taxable. During a second re-audit, the department again reduced the taxable percentage to 52.45% and increased the non-taxable percentage to 47.55%. The reduction in the second re-audit is based solely on assertions made by appellant and not on any documentation or other evidence. Appellant has not provided any additional documentation and has thus failed to meet its burden of proof that additional adjustments are warranted. Finally, appellant paid tax or tax reimbursement measured by cost on all of the raw materials it purchased, so it is entitled to a credit for tax paid purchases that it resells. Accordingly, when the department initially determined that appellant resold 61.64% of raw materials, appellant would have been entitled to a credit for the tax paid on the purchases of those 61.64% of materials. Because the department ultimately determined that appellant only resold 52.45% of the raw materials, appellant is only entitled to a credit for the tax paid on that 52.45% of purchases. The amount of the credit was therefore appropriately reduced to reflect that approximately 9% of the materials initially determined to be resold were actually consumed by appellant. If the amount of the tax paid purchase resold credit is not decreased with the decrease in taxable sales, as appellant argues, appellant would receive a credit for tax paid purchases resold on items that it did not resell, but in fact consumed. Now, as to the 6596 or reliance on the prior audit, we'll note that the Sullivan Group, which was the prior company, is a distinct and separate company. There's no argument that Sully Green Incorporated is the successor to the Sullivan Group, and so the provisions of Section 6596 would not be available to Sully Green as far as relying on that prior audit. Moreover, in March of 2010, after Sully Green, after appellant opened its seller's permit, the department looked into how they were reporting tax, and there's an email that we have from Mariela Tellez that she first called and talked to Mr. Sullivan to explain to him the tax implications of the business and to clarify that what was previously done in that prior audit was not the appropriate way to handle the tax on shutter sales. She followed up that conversation with the email, like I mentioned, on March 17th, 2010. And in that email, she specifically states and lists, gives the annotations specifically stating that shutters are in fact fixtures. So even if there was an argument or a decision made that Sully Green was the successor of the Sullivan Group, which we do not believe is the case, by virtue of the department informing Mr. Sullivan that the shutters were fixtures in 2010, Sully Green or appellant would not be able to rely on that prior erroneous advice.
And which emails are in evidence?
Sorry, so that's the only distinction we have. The email is not part of our exhibits, and we would request that we could provide that after the fact.
Do you have them today?
I do.
Can we get copies made of these emails or whatever other evidence council has that they would like to supplement the record with? Mr. Backus, if you could give Nia the documents, I will ask her to make copies for each of the judges and also for Mr. Davis. Do you need more than one copy of these documents to look at today?
I'll settle for one.
Okay.
For expedience purpose.
And there was also on the issue of the reliance written advice, one thing we wanted to also bring up is there was a mention of an element of Regulation 1705 relating to 50% or greater ownership. That's something that I think I can speak on. It was added in 2014 as part of subparagraphs 1, 2, and 3, and then subparagraph 3, A, B, and C, to subdivision C to 1705. And essentially what it states is that someone who has common ownership and shared accounting function with a person who received audit advice can also rely on that audit advice. What that's intended to remedy is when you have two businesses running concurrently that are related, that are sharing, that are both commonly owned and are sharing, specifically sharing, and that word is used specifically, accounting functions, meaning that one of them was audited, they received this advice in an audit, the exact same, and you can see that in one of the elements in subparagraph C3B, when it's talking about they have shared accounting staff. So it's not talking about successive businesses, it's literally talking about when there are two businesses that have common ownership and shared accounting staff, and it would be reasonable in that instance for the company, of the two related companies that was not relied on, that was not audited, excuse me, to rely on the advice that the singular accounting staff received. And it's actually, I think there's a provision in there that explicitly states that, which is the first sentence in that next paragraph after subdivision C, which says these requirements must be established as existing during the period for which relief is sought. In other words, there needs to be common ownership and shared accounting while this is going on. So we're not talking about a situation where you have successive companies. And again, as Mr. Backus pointed out, they're not a successor, and those provisions for a statutory or legal successor were already in the regulation when this was promulgated. So there was no need to address the situation of the successor because those provisions are here. This was specifically to address two concurrently running related companies, and I think explicitly doesn't apply because of that sentence right there.
I don't have the regulation in front of me. Does it, are you saying that it, before the amendments, it already had a provision that addressed claims of reliance by a successor corporation?
Yeah, I believe that, and I could confirm this, but I believe that the provisions allowing for reliance in, for instance, subdivision A, that it can, an audited person, that can be relied on by an audited person or by a legal or statutory successor to those persons, I believe those predated 2014.
The statutory successor, would that include the acquisition or a merger? Or I'm not familiar with the site, but doesn't generally a statutory successor include the acquisition of another corporation in its entirety?
I'm not sure under the circumstances.
Specifically, yes, a successor is someone who purchases a business of another person. Based on my knowledge of the facts that we have here, that's not being argued, and I don't think that would be the case. In this instance, my understanding is that Mr. Sullivan purchased the assets or the machinery, the tools from the bankruptcy court, and didn't in fact purchase the Sullivan Group.
And the department's view is, City TFA's view is that that does not qualify as a legal successor in this context.
Correct.
Okay.
What is a distinct and separate company then?
I'm sorry?
What is a distinct and separate company? You said that in your argument that it's a distinct and separate company, so reliance does not apply under 6596.
Right. So the Sully Green Incorporated is its own entity. It didn't purchase the Sullivan Group. It didn't purchase other than the tools or the assets of the company. It didn't purchase the goodwill. It didn't purchase the accounts receivable and accounts payable. It purchased a very specific thing. We would normally in a case involving a successor, we would see a bill of sale of the company. We would see just other evidence, and again, it's not being argued that they are the successor.
How would it apply to something like an F reorg
I'm not familiar with that.
That's a mere change in form. So if a company decides to reincorporate as a Delaware company, so it's got a new corporation number, it's a distinct entity for legal purposes, but it maintains the same exact ownership and business.
So the same,
So
so a
that'd be a
business
distinct
just reorganizes,
Yeah.
So that's a successor company. It's the same.
Okay, so even though it's a different corporation, it would be a successor company.
Right, I think in most instances, the successor company is gonna be a new entity.
Okay, so then what about acquisition by asset sale?
Again, you don't have to explain that to me. I'm not familiar with it.
If a company decides to buy another company and all of its functions just by purchasing assets, and it does so for favorable tax treatment.
Again, we would have to look at the specific facts of the case. In my experience dealing with successor liability cases, only purchasing the assets of a company, specifically like the machinery or the equipment, that is not in and of itself sufficient to trigger successor liability.
Right, but successor liability is entirely separate from a successor, statutory successor. One's under the corporation's code, the other is under the tax code.
And I'm not familiar with it.
Okay, and I'm sorry.
Again, this wasn't something that is being argued, and so we would request, if this is an argument, we would request the ability to brief the specific questions post-hearing.
Any further questions now?
No, I'm not sure. Are you intending to do additional briefing or?
Possibly, I haven't discussed that yet, but do you have any other questions?
Well, depending on whether or not there was additional briefing, I did have a question on whether or not, assuming the statutory successor or other element were met, would CDTFA have a position on whether or not there was there was advice provided in a prior audit that it was reported in this manner?
So,
and I haven't looked at the email yet on your argument that there was
right. So
advice.
essentially, our position, the department's position, is that yes, there was erroneous advice given in the prior audit, but that advice was cured via the email that I referenced.
Okay, thank you.
Sorry.
Yes, go ahead.
The email is dated in 2010.
Correct.
The audit period starts in 2009. Is that
Correct.
right? So would that relieve them of half the time? Or?
Potentially.
Okay. Okay. And well, I'll just ask it. In the DNR, the department mentions that because Tricia Sullivan owned 100% of the company at some point in time, that common ownership doesn't exist, and therefore reliance is not available. Is that accurate? Is that still your position?
Not necessarily. I think based on what we've discussed today, I think is more appropriately our position.
Thank you.
Mr. Beckus, we have 3 pages of documents. Would the department be okay if we simply marked these exhibits now for identification? I think F, as in Frank.
4 pages.
Oh, I've got
4.
I only have 3 pages. Which one am I missing? Are there 4 pages?
I have 2.
Okay, all right, so there's 4 pages. So this will be, you're offering this as the department's respondent's exhibit F, I believe.
Correct.
And has appellant had an opportunity to look at these 4 pages? And if so, does the appellant have an objection to the admission of these documents?
I just have.
You need a few seconds to look at those.
Just a minute.
All right, that's fine.
The last page. I
Sure.
I'm not gonna object to these, Your Honor. I know they're late and I can object to them, but they should be before the court.
Thank-
Tribunal, I should say.
Thank you. So the department's proffered exhibit F is admitted, 4 pages are admitted. Now, let's talk for a second about whether or not we need or should be allowing an opportunity for additional briefing. We do not always close the record immediately after the hearing is concluded at the end of closing arguments, and I realize you still have your rebuttal, but let's talk about this first. Is the department going to request an opportunity, or does the department request an opportunity to file additional briefing post-hearing on this issue of reasonable reliance on prior written advice?
Yes, we do.
Okay. I'm probably going to grant that. I don't really have a basis for denying it, and it seems to me that I can tell you I wasn't clear on whether the issue was going to be presented today. What we'll probably do, what I will do, although I'm open to input from the parties and my co-panelists, what I intend to do is grant the department 30 days to submit a written brief on that issue, and upon when they file their written brief with us, a copy, of course, would be sent to you, Mr. Davis, and you would have 30 days from that date, but within which to file a responsive brief is what I plan to do. Will 30 days be sufficient for you, for the department, Mr. Backus?
Yes.
All right, and 30 additional days for you would be sufficient for you, Mr. Davis? All right, that's what we'll do then. And Mr. Davis, you have an opportunity for a rebuttal. If you'd like to do a rebuttal, you're not required to, but I'm happy to give you that chance.
I'll take a few minutes.
All right, go ahead whenever you're ready.
Very briefly, the exhibit, by the way, what exhibit number?
The last 3.
The newest one, these last 4 pages are F as in Frank.
F. Exhibit F, which is an email dated March 17, 2010. I'm sure Mr. Sullivan received it. I believe he talked to me. If we look at the second paragraph, there's a regulation cited 190.1790. But if you look...
That's an annotation. I'm sure you meant that.
Annotation, yes. It refers to where the contractor purchases and sells completed and finished shutters and bills customers lump sum. This is not the case here. We don't have completed and finished shutters being sold. We have a construction contractor who is building the shutters, and this is nothing wrong with the application as set forth in here, but we have concluded that this was not applicable to the appellant here. It's a different form of taxable measure, and that's why he consulted, and he consulted me. And again, it was the people that I contacted. They were either the legal department or taxpayer advocates office. I do have their names, if that's any relevance to this court, for the people that I talked to. One gentleman was...
Mr. Davis, it's not necessary to identify these individuals.
Okay. The point is, this is the legal interpretation. I don't see that counsel has added anything of significance in terms of the legal argument that these are materials that should be taxed as the way we want it. Bear with me a minute. Yeah. And clearly, as demonstrated, the testimony was, once these shutters and their door and their frames were attached to the real estate, they were not easily removed without damage. And that is a very important factor in determining a fixture as opposed to a material. Thank you very much.
Thank you.
Appreciate your time and consideration.
You're welcome. Thank you all for coming in and for making your presentations. Timing-wise, I am not closing the record because we are keeping it open. And according to my calculations, 30 days from today's date is going to be on the weekend of February 23rd, if I've counted that correctly. And we will allow to the following workday, February 25th, for the department to file its brief on specifically on the issue of reasonable reliance and prior advice. When you serve a copy, when you file it with the department, or with OTA, I should say, do you typically individually serve, or does OTA serve your briefs for you? I'm not familiar with that process. So how would you do it, Mr. Backus?
I would do it individually.
Okay, so somehow indicate to us that it's been sent, and then I will know from the date we get it that it was sent to you at the same time. Electronically is how you're doing it?
Correct.
And so you were able to serve electronically on Mr. Davis, correct?
Yes. Correct.
Okay, then I'll know the date you get it. You can just assume, Mr. Davis, that the date you receive it was the beginning of your 30 days to file your responsive brief. I didn't count it up, but it's going to be sometime near the end of March. When I receive your brief, the record will be closed. Do we typically issue separate orders just advising the parties that the record's closed? Or is it automatic?
Claudia normally sends out an order saying on this date the record's closed, and then
Okay.
30 days once from that.
All right, so staff will send out an order after we receive your brief indicating that the record's been closed. And for everybody's knowledge, people from the department know already because they appear before us pretty regularly, but you, Mr. Davis, may not know, other than having sat in the audience this morning. 100 days after the record closes, within 100 days, typically we will have a written decision issued and sent to the parties. Thank you everybody for coming in, and this concludes the hearing, and this concludes these hearing days. So we're through for the day. Thanks very much.
You sure you don't want to take this shutter with you on the plane?
Yeah, I'm pretty sure. Thank you. Although I should ask my fellow judges, does anybody want to take a picture of that for their own identification?